in history is going to collide with a market prophecy that has a flawless 100% track record of massive gains, giving Americans a rare and perhaps last chance to turn a small stake into an entire six-figure nest egg in the next 12 to 18 months. The last time these two rare economic forces collided, investors did have a chance to turn a small stake of $10,000 into as much as $350,000 in just about 12 months' time. And that is why I recently sat down with these two investment legends to get all the details. My first guest today is Jeff Brown. He is a former senior executive of three major public tech companies, Qualcomm, NXP Semiconductors, and Juniper Networks. And thanks in part to all of that experience, he's been able to pick some of the biggest AI winners of this decade before they exploded higher. For example, he picked Tesla before it jumped as high as 2,150%, and AMD before it skyrocketed 4,100%.
Blah, blah, blah.
My second guest is Mark Chaikin. He is a 60-year Wall Street titan who created the famous Chaikin money flow indicator. Hundreds of banks, hedge funds, and professional traders use that to time their trades. And just to give you an idea, Mark's award-winning stock rating system has in fact flashed bullish for all of the top AI stocks since the launch of ChatGPT.
So have I.
Here, 775% in Broadcom, 1,000.
So about everybody else.
3% in Western Digital Corp. Just
come on, get over this.
Watch this interview because we actually don't have much time
crap.
to prepare here. The Wall Street Journal has even recently warned that Americans could be seeing now the last chance to amass generational wealth. Watch the short interview now and get all the details yourself.
Short the market.
Then
Get wealthy.
Take it back with Rougiette Ready, the 3-in-1 ED med that's up to 3 times faster than pills. Works in the brain and the body. Can start working fast and last up to 36 hours. Personalized to you, delivered to your door. Make your 20s jealous with Rougiette Ready. Get started today at Rougiette.com.
When I started Walton Goggins Goggle Glasses, I needed a website. And GoDaddy Aero uses AI to make a beautiful website so fast it'll blow my customers' noggins. While they're shopping for Goggins for their noggins. Didn't need it charged.
For those who like their stories larger than life, we love fans. Stream Oppenheimer for free on Fandango.
Welcome back, everybody. Target and Walmart among the retailers set to report second quarter results this week. Joining us right now with the preview is Corey Tarlow. He is Jefferies equity analyst. And Corey, thanks for coming in today.
Thank you for having me.
We're going to look at these two companies. We always put the big boxes together, Walmart and Target, and figure that they're the same. But when you run the numbers on it, they're actually very different companies. Walmart's got a $917 billion market cap. Target's is $70 billion. PE for Walmart, 40.6. The PE for Target is 20.4. Now, Target's made a lot of progress. That stock is actually up about 47% over the last year versus up 14% for Walmart. But these are companies that you probably have to measure pretty differently when you're looking at them, too.
Yeah, I'd agree with that. And I think one of the foundational differences is really in their mix. Okay. So Walmart is 2/3 food. Target's about 50% what they call need-based, but only 25% is actually food and beverage. And so I think in today's environment where you have tax refunds that were up but are now exhausted, you have fuel prices that are now above $4 a gallon nationally, you're starting to see a little bit of stress on the consumer.
How does that show up in terms of what you see in the stores, in terms of traffic, in terms of spending?
So right now, traffic is up at a lot of the value-oriented retailers like Walmart, like Target. We published our preview last week, and we highlighted traffic growth at Target up almost 4%. So clearly people are going to places like Walmart and Target deliberately for the high-quality products at the affordable prices. But the question becomes, to what extent do they then decide to rotate into those categories away from discretionary? Because inflation is biting, and especially among lower income households, they've seen a lot of stress year to date. Higher income consumers have been relatively resilient, but The question, I think, becomes ultimately, how does this affect trends for the remainder of the year?
And what would you tell people to do with these stocks? Obviously, both of them have been up over the year. Target's seen faster growth in some of these arenas. But again, you go back to that PE ratio. Walmart's got a 40 times earnings. That's not a company that trades like a retailer. They've got advertising, they've got digital, they've got a lot of other things. Is that a fair valuation for that? And where do you think Target is headed after the big growth it's seen to this point?
So despite Target's substantial run, we actually think that there's more opportunity. We think there's more opportunity at both, but I'm highlighting Target specifically in light of the cheaper valuation and the quotient or the ability for change. Because you have new management and you have new product, you have new processes that they're implementing, and guess what? It's working. For years, Target was kind of slowly bleeding, if you will, and we're starting to see a bit of a resurgence. For example, 50% of their assortment's going to be new this year for back to school. They've added 1,500 new beauty items. They've added 3,000 new food and beverage items. This type of newness is actually translating into traffic. They're not going to beat Walmart on price. Nobody beats Walmart on price. But you have to be different, and you have to be unique, and you have to be new. And for Target, that's working.
So they weren't investing before, and now they are?
That's a great point. So I think the answer is yes. This year specifically, they've actually called out up to $2 billion of incremental investment. And this is a business that, I mean, they're in a penny profit business. Their margins are razor thin. Today they're about 4%, which is on trough. And you're putting 20 times multiple on trough margins. We like to buy stocks when companies are at trough margins. Historically, they've averaged close to 6. So there's about 200 basis points of margin opportunity. And they're going to recapture a lot of that as the comps come back, because you see that flow through better traffic, as shrink declines, as markdowns come down. All of these things, I think, create a very attractive story from an investment perspective.
Okay. Corey, thank you for joining us today.
Thank you so much for having me.
It is just past 7 a.m. right now on the East Coast. You're watching Squawk Box right here on CNBC. I'm Andrew Ross Sorkin along with Becky Quick. We're taking a quick look at the futures right now. Dow down just a bit, about 82 points. NASDAQ up close to 200 points, about 196 points higher. The S&P 500 looking to open about 7.5, close to 8 points higher. Let's show you treasuries right now. The 10-year note sitting just at about 4.69, under 4.7 there. The 2-year sitting at 4.16. And then energy prices, of course, we've been talking about the energy ecosystem for quite some time as maybe the barometer where all this is going. WTI crude right now at 82.87, Brent at 89.29. And join us right now with some more on the markets and some individual stock names. Stephanie Lane, Hightower Chief Investment Strategist and a CNBC contributor. Good morning to you. We've been talking about some of the geopolitical issues this morning, some of the things coming out of the administration as well from over the weekend. And then we've also been talking about some of the earnings we're going to hear later this week. How are you positioning yourself in this particular moment?
Yeah, and it's great to be here, Andrew. Look, I think that even though we took a breather last week in the markets, the economy is still chugging along. The Atlanta Fed tracker for the quarter is running at 5.8% for GDP. I don't think we're growing that fast, Andrew, but I do think directionally we're accelerating from last quarter. And it is because of AI and the food chain. We heard from Cisco and Applied Materials and CoreWeave and Supermicro last week. So that's still working. And the consumer is still actually consuming. And I think you're going to get some really good reports, minus the housing cycle and stocks. But I think you're going to see very good numbers from Walmart and from Target, as you guys were just talking about. But when I listen to what the banks have said, they are talking about a very strong consumer, and that even the low end is starting to do a little bit better. They're lending at about 8 to 10% growth. That's very healthy. We have ISM services that are up 20 consecutive months in a row. Retail sales, if you average the last 2 months, because we did have the pull in from Prime Day at Amazon, you're running like 5 to 6%. So I feel good. Earnings are really growing rapidly. I don't think we're going to see 50% growth forever, but we are seeing a lot of momentum. I am encouraged with not only revenues growing double digits, but also gross margins expanding. And oh, by the way, we're on pace to do $4 trillion in M&A this year, which would be a new record.
So, it's funny, we constantly talk about all these big geopolitical headlines. This morning, North Korea being one of them. We talk about wealth taxes in California. We talk about what's happening in the Middle East with Iran and oil prices. And yet things continue apace. Is there an argument to say that things are so strong that we just should look away from the other stuff?
Well, I think the fundamentals are really strong, and I think not only are earnings good, but they're very broad-based. 10 out of 11 sectors saw growth this past quarter. 7 out of 11 saw double-digit growth. So I don't think you want to fight the economic momentum. And I know, there are a lot of things to worry about in terms of all the things that you mentioned. It's never perfect. And I worry when I don't worry, because that means we're all complacent. But the underlying fundamentals are so strong. I think you want to continue to be fully invested. I think you want to be diversified. I love that we're broadening out, not just seeing it in technology. And I think we grind higher into the end of the year, because I think earnings may not grow at 50%, but they're still going to grow. I think 20.
What do you think on the tech side? We were talking in the last hour about Berkshire Hathaway's investment in Alphabet. We're going to have Greg Brockman, who's one of the founders of OpenAI, on the broadcast at about 8:30 this morning. Obviously, we got into a whole, I don't know if you were watching a debate or interesting conversation about what's going on in the bond market as it relates to some of the financing for some of these data centers. But if you already owned, this is a big question for a lot of people who have owned the Magnificent Seven, do you stay in them?
Yeah. I like some of the Magnificent Seven. I think Amazon is the best position, because I think they can win in very, very many ways. Obviously, AWS, and seeing an acceleration to 38% growth from 27% growth the quarter before. That's really good. I think retail sales are running. The businesses are running about 9% comps. Margins are expanding. So I like Amazon. I do like some of the tech set, like some of the newer Mag 7s, if you want to call Micron in there. I recently bought that, down 20% from its highs, with $100 billion of bookings between now and the end of the year. I recently bought NVIDIA for the first time. I've been a big fan of Broadcom, but NVIDIA is the cheapest it's been since 2019, and they're growing like gangbusters, like 85% revenue growth. Margins are 75%. They're going to double free cash flow. And I also bought SpaceX, and I have been buying SpaceX. I bought it during the IPO, and it's pulled back about 30%. They had a great quarter. And I think given the CapEx numbers are going higher, but the company talked about seeing monetization within a year. So I'm all right with them spending 65% growth in CapEx. So I think there's plenty to do in technology, but I also like other areas as well. Financials, industrials, we've talked about a lot of the food chain names in AI as well.
Stephanie, I want to thank you, and your mention of SpaceX is a nice segue to our next piece of news. Thanks.
Okay. SpaceX, in fact, logging a new spaceflight record during the weekend. Back-to-back Falcon 9 launches, just 38 minutes apart. That is the shortest time ever between two orbital flights. The first was from Cape Canaveral in Florida on Saturday night. It carried 8 satellites for Globalstar. The second Falcon 9 mission was from Vandenberg, California, with a classified payload for the U.S. Space Force. SpaceX shares are on the rebound since hitting a post-IPO low of $108 a share at the end of July. You can see the stock is up about 30% so far this month. It's now trading above $141. Coming up, we will speak with an analyst about the prospects when Squawk Box returns.
You've put up with your old shower for too long. It's outdated, unsafe, and it's time to replace it. But why struggle with a lengthy shower remodel when Jacuzzi can do it in just one day? And there's no need to break a sweat or your budget. Right now, we're waiving all installation costs, plus offering 0 interest and 0 payments for up to 1 year. So you can finally convert your old bath to a safer, easy entry shower, complete with a custom seat, grab bars, and slipper-assistant floor installed in 1 day.
My overall experience with Jacuzzi has been wonderful. Everything was customized to the way I wanted it for the price that I wanted to pay.
I've had a great experience from start to finish.
Don't take matters into your own hands. Do it the smart way. Give Jacuzzi Bath Remodel a call.
There are only weeks remaining during our limited time offer. We're waiving all installation costs and offering no interest and no payments for up to 1 year. Go to jacuzzibathremodel.com or call 800-632-6799.
BriaCell is in its final phase 3 trial for metastatic breast cancer, offering patients cutting-edge immunotherapy. With a novel platform technology targeting multiple cancers, BriaCell is shaping the future of cancer care. BriaCell.
It smells like vacation. What are you laughing at? It does.
I have fine hair, so I want a product that doesn't make it look flat.
I just want ingredients that make sense for my hair and results that I can see.
Honestly, you're not asking for too much. At Kitsch, we don't guess what your hair needs, we listen. Premium ingredients, salon quality formulas, sustainable packaging, real results. The hair you want without the trade-offs. Kitsch, hair care without compromise.
Hey. Hi. Could you please submit your expenses today? You have those expense reports? Hi. Can you submit those receipts?
Never chase a receipt again. Ram, love finance.
We know why you've put off your best smile. The time, the cost, the anxiety. That's why Aspen Dental is changing how dentistry is done, with technology to make care comfortable and flexible hours to fit your life, all at an affordable price. New patients without insurance get an exam and x-rays for just $29. Not waiting for tomorrow. That's the Aspen Dental difference. Aspen Dental. It's time to smile again.
NVIDIA reporting its stake in SpaceX was worth about $21 billion at the end of the second quarter. The chip maker says that it owns just less than 123 million Class A shares of SpaceX, currently its second biggest holding behind Intel. Joining us right now with more on SpaceX is Doug Harned. He is Bernstein's Aerospace and Defense Senior Analyst. And Doug, we were just talking with Stephanie Link. She sees something she likes in this stock and has been buying it. You see something you like too. You got an overweight rating on this stock, an outperform rating, and you raised your price target to $248 after the conference call for the second quarter earnings. What's happening here? What about the bounce that we've seen in these shares? Why don't you just kind of sum up everything you're seeing right now?
Yeah, well, yes, and first, thank you. We're definitely also very positive on the outlook for SpaceX. And I think what is so important here is that if they can get the orbital AI, basically orbital data centers to work, we think this is still a very exciting opportunity. And when you look at what happened in Q2, the stock actually declined some in Q2. And I think it was concerns over the amount of CapEx and possibly some to do with lockup expirations. But our view was that Q2 report was actually quite positive. And you mentioned just before about they just completed 2 launches. Those are Falcon 9 launches. What we're really looking for are the Starship launches. But I think what's significant here is that they have even pulled up the time frame in which they think they can get large numbers of Starship launches out there. In fact, if you look at their plan now, it is to be able to have essentially pretty close to 1 Starship launch a day when you get to the end of 2027. And that would be on, say, 5 launch pads. That would be the hope. We've taken a much more conservative view, sort of in our whole ramp rate forward out to 2031. But even with that conservative view, where we get out to around $600 billion in revenues in 2031, which is significantly below what they're talking about, we think this is still a a really powerful opportunity here.
Doug, the company's own reason that they say that they're going to be hitting $1 trillion in revenue in 2030 instead of in 2031 was really based on something else. It was based on the pricing for compute power. How do you kind of factor where compute comes in? How important is that relative to the other areas of the business?
Absolutely right. And there are two parts to that. So our assumption had been first that the revenues, if you think of the AI revenues as a mix of intelligence and compute, we've been making the assumption that it's predominantly compute. And I think that's still the right thing to do going forward. But what they're finding, and if you look at the recent Anthropic and Google deals, they've been pretty clear that this is not the pricing they've seen in these deals, which are between $30 and $50 to $55 a watt. That pricing is not really a surge price. I mean, they're out in the market and they're seeing pretty attractive pricing opportunities. That led us to take up, well, actually two things. One is their plan now is to build out more terrestrial capacity, which is more CapEx. And then in addition, they're expecting pretty attractive pricing here. And we've pushed up our pricing expectations some over the next couple of years to reflect that. But I should add, there's one other factor here. And for us, it's a little bit of a wild card because depending how Grok does, and Grok 4.6 is out there, you've got the Cursor deal, you may be able to see a more attractive intelligence product as well, which that's not something we've incorporated, but could provide some more upside here.
What is one thing that would worry you? You mentioned that you're not overly concerned about the CapEx worries. Obviously, you're not very concerned about the expiration of the lockup period for some of these shares. What do you worry about?
Oh, I think our concern is all the way back where we started. It's all the way back to this launch cadence. Because to get to the numbers we're talking about for 2031, which granted are significantly less than the company's, we're looking on the order of 3,500 Starship launches in 2031. So what you need to see is success on reuse of Starship. We haven't seen it yet. There is the intent on launch 14, which should be, we think, the next few weeks, that launch 14 can go to orbit, can demonstrate that, and that you also may be able to demonstrate the capture of the second stage, which that's what you need to be able to do to have reuse. So this path toward full reusability, that is absolutely central to the AI play here long term and to the kinds of valuations that we're seeing right now and that we expect.
So we've mentioned AI, we've mentioned the launch piece. We haven't talked about Starlink, which is actually where most of the real money is coming from at this moment. And the question, which we keep hearing about Starlink becoming sort of a broad national cell phone carrier, global, carrier direct to the phone. How much of that is in your equation? What do you think the cost of the true build out of that is? How big a market do you think that is? A lot of people have had questions about, obviously, using satellites to get to the phone. Obviously, in big cities, it doesn't work, but maybe if every Starlink antenna all of a sudden also becomes a transmitter nearby. I don't know. I'm just trying to understand how you get there.
Yeah. So I will say the starting point, the Starlink business is fantastic, and this is already a hugely successful business, and likely will continue to be that. We still do see the AI portion as what drives the value. That said, I think you've got to look at Starlink in three pieces. And the first part is consumer broadband, and that market is a huge global market by itself. And one of the things that's exciting here is that you're seeing Starlink as a broadband service. Once you're established with the constellation that's close to 10,000 satellites, you can essentially add customers in underserved areas for almost any price you want. The fixed cost is already there. That market, the enterprise market, which includes government, we've already seen two very important defense contracts go to Starlink.
No, I think everyone understands that piece of it. I think the big question mark is the consumer wireless.
The D2D, right? The D2D portion, and the D2D one, I will tell you, we are more skeptical on that. They have projected some very high growth rates. You're going to see these new V2 satellites put up. They're more attractive. They have larger antennas, and they're lower Earth orbit than the current Starlink. However, from our standpoint, it still appears there are really big technical hurdles here, and ultimately, we see that the path should be to become an MVNO and to have worked deals with, well, certainly in the U.S. with at least one of the.
Doug, because we got to let you go. What happens if they buy Tesla? Would you advocate for that? Not? And what does that do to the price?
I think we lost his
audio.
He was talking, but we couldn't hear him.
Well, we'll have to have him back to find out the answer.
That we will.
The tease.
I want to thank him for
deep cut of a tease. Coming up, AI video creation platform Higgsfield is seeing its valuation pop after Goldman Sachs and Intel backed that startup company. We're going to speak with its CEO about latest funding round and what's next in the AI arena. Don't go anywhere. Squawk Box, come right back.
It can be snapper or sea bass.
Thin crust or deep dish. But for something as serious as reducing stroke risk due to AFib not caused by a heart valve problem,
that's a choice that matters. And my doctor and I chose Eliquis. Eliquis reduces stroke risk and has less major bleeding than warfarin. Over 97% of Eliquis patients did not experience a stroke.
Don't stop Eliquis without asking your doctor. Stroke risk may increase. Eliquis can cause serious and potentially fatal bleeding. Don't take if you have an artificial heart valve, abnormal bleeding, or antiphospholipid syndrome. While taking, you may bruise more easily or bleed longer. A spinal injection increases blood clot risk, which may cause paralysis. Get medical help right away for unexpected bleeding or bruising, or back pain, tingling, numbness, muscle weakness, or incontinence. Aspirin products, NSAIDs, SSRIs, SNRIs, and blood thinners increase bleeding risk. Tell your doctor about planned medical or dental procedures.
The #1 cardiologist prescribed blood thinner.
Ask your doctor about Eliquis.
Make the bed shake. With meds that prime your brain for arousal, boost blood flow where it counts, and help you last longer in bed. Rougiette's ED meds are personalized to you and delivered right to your door. Your best sex starts now. Get started today at Rougiette.com.
Who's liable when it's wrong?
Well, of course.
You are accountable for the work?
I think what Michael's trying to say is,
I know how to make slick-looking goggles/glasses, but I have no idea how to make slick-looking social media stuff. But GoDaddy Hero uses AI to create social content out of thin air, like this one. Walton Goggins goggle glasses are great gifts for all guys and gals.
You can master your strategy, but performance could be limited by your instrument. Precision trading starts with the right instrument. Over the past 3 years, Interactive Brokers clients outperformed the S&P 500 on average. Like returns, trading costs compound. Interactive Brokers is built to lower costs through smarter execution. Access stocks, options, prediction markets, and more across 170 plus global markets. The best informed investors choose Interactive Brokers.
Golf Channel's hit series is back.
The Big Break.
Big Break Good Good, presented by Golf Galaxy. New season premieres August 25th on Golf Channel.
Welcome back to Squawk Box. So artificial intelligence video creation platform Higgsfield announcing a new funding round that includes Goldman Sachs and Intel. Company received $400 million, pushing its valuation to $5.4 billion. Company's CEO, Alex Marshall-Relfov, am I pronouncing that correctly, is here. It's nice to see you. For those uninitiated, I have not used the service, but how does it work? And what does it do? Because it's a remarkable valuation for a startup.
Thank you for having me here. So Higgsfield AI is a leading video AI platform, which defines a new way how video contents can be made at a fraction of a cost, where the timelines now can be measured in days, what typically took months. And what's also important about the company is that it sits at the intersection of three enormous industries, like creator economy, advertising, and entertainment.
So who are the big clients for this? Who are your customers?
We as a business evolve very quickly. Just a year ago, Hicksfield was primarily used by individual creators. Now most of the revenue actually come from businesses. The most popular use case on the platform is actually social media marketing, and entertainment is the second most popular use case on the platform.
And do you see it continuing that way? I mean, do you believe that marketers will be the biggest users of this, or are we talking about Hollywood?
Absolutely, we see enormous opportunity to grow in the marketing space. Today, Hicksfield is seen as a new platform just to make content more efficiently with AI, but also to drive hyper-personalization. That's what marketers need a lot. Because look, I mean, everyone wants to be able to go and tailor their messaging across 100 different ICPs, across 100 different user groups. Now this becomes possible with AI. But what's more important is that direct-to-consumer brands today can go on Hicksfield, use our agentic product like Supercomputer, and essentially use AI to drive more sales with AI-generated video ads.
We were talking during the commercial break about the models that are underneath your model. So explain what your model's doing and then how you're using other models on top of it.
That's a good question. Fundamentally, marketers want to get out compelling content, which drives more sales, more brand awareness. And our goal is to build a layer on top of all other models to democratize access to all of them. Just earlier today, we were talking that Qwen, for example, overcame many other labs by just by usage. And there are probably 25 competitive models out there. We absorb this complexity of using various models and build a layer on top of that. So, and you know, like when we look into like 5-second long video, it can take a prompt of 5,000 words to describe it, and we absorb all this complexity by our agentic layer.
I think it's really interesting that you're working with all these models and you are seeing the horse race up close and personally, kind of watching what happens with this. You said 3 months ago, Qwen wasn't really even on the radar screen. Now it had more than 3 billion downloads that are put there. There's not a lot of loyalty. There's a lot of switching around. Why do companies, why do people switch models so rapidly?
Absolutely. I think in every industry, every professional is essentially looking how they can supercharge their productivity. And this trade-off between cost and level of intelligence the model provides, I think is very loosely defined today. That's why at Hicksfield it's so important for us to actually deliver business outcomes. Today it's mostly used to make commercial quality ads like for Super Bowl or for Olympic Games with AI within a matter of days. But going forward, we are actually envisioning direct-to-consumer companies to be able to sell more products through hyper-personalized video ads.
Okay, so here's to me the fundamental question underneath AI. We've been talking about it all morning on the chip side, but the chip side is very dependent on some of the frontier closed models and the valuations of an Anthropic or an OpenAI based on the idea that services like yours and customers like us will end up paying for those services at those rates. Given these other models that you're now using, what do you see happening to an OpenAI or an Anthropic long term?
Personally, we are really excited about the partnership with both OpenAI and with Anthropic. And looking specifically at the image generation space, OpenAI has state-of-the-art model over the last maybe 6 months. And this model is perfect specifically for marketing use cases. For certain other use cases, like for example, image editing and so on, there could be different models used. And that's essentially our job to pick the best model for each use cases. And we definitely also are seeing that like OpenAI models specifically are very good in creativity, which is quite important for creative ads use cases.
But when you look at a Kimi K3 or just any of these other models that are much cheaper, do you see that breaking the economic models of these other companies or not? I mean, if you said they're not going to break it, that's like a all go ahead kind of signal. If you said, yeah, it's going to bring the price of these things down, it just has to, then the question is there so much more volume that makes up on it on the other end? How does this all work?
I wish I could give you a firm projection, but that's maybe a $10 trillion question, right? But looking at just at our data, we're seeing that there are 6 models on the platform which has usage of at least 5%. Meaning that the usage of the models on the platform is quite evenly distributed, and there is no model which just wins all of it.
I know we got to run. I have one last question though, and this is the other sort of big piece of it, I think. So Anthropic arguably is at least a couple of months ahead of everybody else, I think. You may disagree, but there's an argument to be made that whoever sort of gets to recursive learning, meaning it starts to learn on its own, that all of a sudden it becomes a hockey stick. And instead of being 3 months ahead of the next guy, you can all of a sudden become 2 years ahead of the next guy, in which case that the whole game basically ends and that there's one winner. Do you buy that argument, or is there, you see the whole world very differently?
This is the whole thesis behind Higgs fields. The core challenge with all these LLMs is that they get stale very, very quickly. I mean, the knowledge cutoff is like March 31st or December 31st and so on. Social media and marketing is run on trends. And essentially, we run this harness layer to also ingest a lot of external information about the trends. We run a lot of parallel web searches on behalf of the user to help them to do market analysis and ingest all the trends to the video generation. So that's the whole premise, and I think there is no model which actually provide this level of freshness today. That's why we have to build our own agentic layer on top of other models.
It's a longer conversation. Alex, thank you. Appreciate it. Thank you. We've got another AI conversation on the way this morning. OpenAI's co-founder and president, Greg Brockman, is going to join us for a live and exclusive conversation at 8:30 a.m. Eastern Time. So much to cover with him, from cybersecurity to the latest high-profile departures from the company. Squawk Box coming right back after this.
At Corient, the fact that we've spent years building a business that is around the founder really puts us in an unusual spot to help.
We actually help them understand that the lifestyle that they're going to have in year 1 is going to look a lot different in year 3 and year 5, and we need to help them evolve as they kind of go through that process.
The idea of having us co-pilot the structuring and then, of course, the life after the deal, but the deal itself has been something that I think is invaluable and hard for them to find someone else like us.
The difference between a good day and a less than great one, it's all in the details and how you see the world. And that's why my mornings start with Viz, a once-a-day eye drop to treat blurry near vision. Menus, labels, screens, even doing my makeup, little things started to be big problems. But now I can stay in the moment, clear, confident, and free to go with the flow.
Consult an eye doctor to see if Viz is right for you. In clinical trials, the most common side effects include eye irritation, temporary dim or dark vision, headaches, and eye redness. Do not use Viz if you are allergic to any of the ingredients.
Cybercriminals are constantly using AI to attack. They want your data. They want your identity. They want your innovation. ReliQuest's AI detects, contains, and eliminates cyber threats faster. ReliQuest, agentic cyber defense.
Weeknights. Sometimes it's impossible to make heads or tails of what's going on. Yet that never seems to stop the bears from invoking history as a way to scare you.
Mad Money, weeknight 6 Eastern and streaming on CNBC Plus.
The shampoo aisle's full of promises and none of them really deliver for my hair.
With other products, my hair was always dry.
I'm so tired of the trial and error, and I want to find something that just works.
Hair can be complicated, but your hair care shouldn't be. So we listened to every complaint, looked at every failed formula, and every product that overpromised and underdelivered, and we fixed it. Rich lather, sustainable packaging, real results, with no luxury markup. Kitsch, hair care without compromise.
Another day in the finance department. Wait, did we pay this already?
6070 airfare, 6040 meals and entertainment. Receipts, expense reports, invoices, purchase orders. What's that? RAM? Cards with built-in policies. Expenses that submit themselves. Look at it go. Okay, but does it code Oh. We're fixing the parts of finance you hate. RAM. Love finance.
Welcome back, everybody. President Trump speaking to Fox News, saying that he is in no hurry on Iran and that they should wave the white flag. He said that there is a back channel with Iran's Revolutionary Guard, and he threatened to bomb Oman if it gets in America's way. That is likely in response to Iran's claim that it is working with Oman on a plan to manage the transit of ships through the Strait of Hormuz. He also said Israel should not be striking in Gaza and that he may endorse someone in Israel's election. Taking a look at WTI, we are slightly higher this morning, up by about 9 cents to 82.49. We were up by about 5% over the course of the last week. When we come back, former St. Louis Fed President Jim Bullard will join us on the central bank's inflation battle, the future of rates, and the state of the economy. He will join us next. Squawk Box comes right back.
So I ran some numbers. You guys might want to consider moving.
Somewhere else?
I doubt it.
These shall ease your grievous throat most readily.
Or maybe a saltwater gargle.
Sold. Congratulations, sir. That is a new record.
You realize a JPEG doesn't count as a financial plan, right? Maybe. I mean, yes. No.
PNC Bank believes a little boring advice goes a long way.
It was the stock market that started history's greatest wave of wealth creation. From factory workers in Detroit to farmers in Omaha, anyone could own a piece of the great American companies. But today, our most innovative companies are staying private longer, which means everyday Americans are missing out. Until now. Introducing VCX, the public ticker for private tech.
Take advantage of an expert-managed portfolio with Robinhood Strategies. With advanced insights, our advisors help spot opportunities aligned to your goals. Your ambition just met its match.
Over 90% of cobalt used in batteries comes from China. Electra Battery Materials, awarded $20 million by the U.S. Department of War, is bringing the battery supply chain home, reducing dependence on China and revitalizing our industrial base. Electra Battery Materials.
Think of all the places that could expose you to identity theft. LifeLock monitors hundreds of millions of data points per second and quickly alerts you if we detect any suspicious activity, like changes to your investment accounts, home title, or new loans in your name. All through text, phone, email, or the LifeLock app. Get the alerts that could make all the difference. LifeLock, for the threats you can't control.
The impetus for Element was just a recognition that my health was impacted by inadequate electrolytes. There was nothing on the market that met the needs. It tended to be super high in sugar, woefully inadequate in sodium. When I finally did get my electrolytes on point, it was like a light switch was flipped. We've seen this play out across thousands of health journeys. I hope Element can be just as meaningful for you.
Become a smarter investor with CNBC Pro. 24/7 access to market-moving news and interviews with 3 global live streams. Become a CNBC Pro. Go to cnbc.com/getpro now.
Welcome back to Squawk Box, everybody. Check this out. This is a live shot of the National Debt Clock. It's just down the street from our studio. It's about half a block from here. If you see that number, it rises incredibly rapidly. It is very quickly approaching the $40 trillion mark. It was just $2.7 trillion when that clock was turned on back in 1989, but you could see how quickly it is racking up. This clock points out your family's share is more than $683,000 at this point. Concerns about the debt have been something that we have heard from pretty storied investors, people like Paul Tudor Jones, who just said a couple of years ago he wouldn't own fixed income because of his concerns about rising U.S. deficits and debt. Stan Druckenmiller has very publicly talked about some of his concerns about some of these things too. Jim Grant, who comes on. But we're watching this closely. Ben Emmons points out that since 1970, nominal GDP has expanded by an average of $470 billion a year, which is phenomenal. Unfortunately, the federal debt has climbed even faster, rising at about $760 billion annually over that same period.
I'd love to recommend to our audience, if you get a chance, there's a piece called When America's Budget Will Break Disastrously. It came on the Washington Post late last week. It is possibly the smartest thing that I've read that actually lays out the numbers in detail. 2030 is basically when the inflection point for all of this, because we will move back to basically an economy that was like World War II. I mean, literally, the federal outlays on defense will be at that level. Everything sort of starts to look basically like the 30s and 40s then. And then most importantly, if demographics are destiny, 1 in 5 people will be 65 or older in 2030, and there'll be fewer working age people for every senior American, and 2030 is the year when deaths will exceed births at the current rate, which raises all sorts of questions, by the way, about immigration in this country, in terms of what you may need if you want to grow. So it's a fantastic piece because it really gets at what's underneath that number that we're going to be watching.
Joining us right now to talk about this, weigh in on inflation, the Fed's rate path, and much more is former St. Louis Fed President Jim Bullard. He is business school dean at Purdue University. And Jim, I'll just use that debt clock as maybe a jumping off point. $40 trillion is a huge number, hard to get your head around that. But people who have warned about this for decades have been wrong. And in fact, we've actually seen Treasury yields come down pretty substantially over that arc of history from the 1970s until now. What do you think about it? How, as someone who was on the FOMC, do you kind of look at this and say, what are our roles, our responsibilities? What are the levels that would concern you?
Yeah, well, this is the Mitch Daniels School of Business, and Mitch was the director of OMB at one point in his career. He's been a harsh critic of U.S. federal budget policies. So it's all right on. I think one thing that has happened in the last year is that you've got 6% federal deficits, 6.5% maybe projected out, as Andrew was saying, out till 2030 and beyond. And, that's a lot. Those are really big. Usually you would say, steady state would be 3%, and you'd like to be lower than that. So we've got a long way to go. And if you think divided government is coming up with this election, and I think markets are worried about this, that you've really entrenched very high fiscal deficits for as far as the eye can see. And there seems to be no end in sight. There don't seem to be politicians today that want to take this problem seriously and make relatively small adjustments today that would put us on a good track for the future.
I mean, part of the reason that we've been able to get away with this so long has been our GDP growth. I think nominal GDP growth of 9% is a big part of what's been fueling this. How do you kind of measure our GDP growth, what we've been able to accomplish, and whether those deficits can be maintained?
Well, maybe a silver lining of the inflation in 2021 and 2022 is it did get the debt to GDP ratio to fall. That isn't a happy way to do it. You're basically partially defaulting on those that purchase securities. So I don't recommend that approach. And the projections are now that the debt to GDP will rise all the way out till 2050, you'll get to numbers like 140, 150% of GDP. And unfortunately, I think for us, the world is willing to lend the U.S. a lot, and so that takes some of the edge off this. But the problem is, if you get into a crisis at some point in the future, then it can be very bad for the U.S.
Let's talk about yields, where they stand right now. The 10-year now sitting just below 4.7%, the 2 years at 4.16. There are a lot of questions about what the Fed will do next, although I guess the weakness in the jobs market and the slightly lower inflation data that we've gotten recently have taken the edge off of some of that.
Yeah, the market probability of a move at the September meeting has now fallen to maybe 25 to 30%. I didn't see it this morning, but certainly lower than it was. It was over 50%. That's based on softer data. Somewhat ironically, Chairman Warsh has not wanted to have policy so sensitively dependent on recent data movements, but that's the way the market operates. I think the September meeting is very interesting here because Chairman Warsh has said he doesn't want to give forward guidance, but the September meeting is the meeting that gives the most forward guidance of the entire year, because the dot plot is, the one dot is for the end of 2026, which is only 100 days away at the time of the meeting, and so you're giving a lot of guidance about the 2 meetings remaining in the year after the September meeting. And this has been a problem for the committee in the past. It's now looking like the committee might say, stand hold for the, at least via the dot plot. They will say no change at the median for the rest of the year. And does Chairman Warsh really want to be locked into that or not? I think that's a good question. And there's just one other thing I wanted to say about this, which is the core PCE inflation rate on a 12-month basis is still projected by the committee to come in over 3% at the end of the year. So it was 3% or higher at the end of 2023, at the end of 2024, at the end of 2025. Now you're coming into 2026, again over 3%, and you're saying it's kind of okay via the dot plot because the committee's probably going to say they're not going to do anything for the rest of the year. So I think this is really the conundrum for Chairman Warsh. He said we are going to stick with the 2% inflation target. We are going to get back to 2%. How's he going to do that if the committee's not going to make a move?
Yeah, and I guess the whole reason for him not wanting to give forward guidance is to not be locked into anything.
Exactly. And so actually, Jackson Hole, if he wanted to, he could use that to water down the dot plot or eliminate the dot plot. So that's maybe something to look for here. I don't know. It seems a little abrupt to me. I don't know if he would actually go ahead and do that. But this flaw in the way the thing was designed, where you give this heavy amount of forward guidance right at the September meeting, you're basically saying what you're going to do over the next 90 to 100 days. That has been exactly the sort of thing that Chairman Warsh has said the committee should not do. And so we'll see what he says.
Jim, how do you feel overall about the economy, about where we're headed?
Yeah, I think the economy's doing very well. I think the labor market is, certainly solid, in equilibrium, I would say. And so it's really the inflation side of the equation. I actually think it's a good time to fight inflation while the economy's moving. You've got the AI boom.
You mean a good time to raise rates?
Yeah, I mean, why not do it now? You don't want to wait till the economy's suffering and then have to make an agonizing decision. So it would be a good time, I think, for the committee to signal that they want to get inflation down to 2% a little more rapidly than what markets are projecting now. And they don't want it to continue to hang up at 3% on their preferred measure, all the way out to 2027, 2028. If they do that, markets will say that they've abandoned the 2% inflation target, and that's really a problem for the committee.
Okay. Jim Bullard. Jim, thank you.
Sure.
Coming up, we're going to get into all things around the media industry, from Hollywood studio dramas to power players, deal making, and so much more. Lightshed Partners founder Rich Greenfield joins us next. Rockbox coming right back.
Hi, folks. By now you've been hearing a lot about investing in Y-Refi. Why invest in Y-Refi? Well, how about an investment where your interest is calculated daily and you're paid monthly? Make sure to review the PPM and scan this QR code for more details. Accredited investors only, but many people are accredited and may not know it. Give them a call to find out if you qualify. Y-Refi. You'll like investing in America's future.
When I started Walton Goggins goggle glasses, I didn't know how to turn all this fancy prettiness into a classy looking logo. But GoDaddy Aero does, with its magical AI powers. It not only creates it, it slaps that sweet thing everywhere.
BriaCell is in its final phase 3 trial for metastatic breast cancer, offering patients cutting-edge immunotherapy. With a novel platform technology targeting multiple cancers, BriaCell is shaping the future of cancer care. BriaCell.
Make the bed shake. With meds that prime your brain for arousal, boost blood flow where it counts, and help you last longer in bed. Rougette's ED meds are personalized to you and delivered right to your door. Your best sex starts now. Get started today at Rougette.com.
You built a successful career. What you never built is a team whose only job is keeping more of what you earn. Whether you own a profitable business or earn a high W-2 income, there is far more available to you than you have ever been told. The tax code is written to reward people who plan, and it rewards high earners who plan most of all.
Neil Jasani Tax Advisors, a national tax and accounting firm for ultra-high income households and mid-sized businesses.
Hair can be complicated, but your hair care shouldn't be. At Kitsch, we listened to our customers, what they want, and that's what we gave them. Rich lather, real results, with no luxury markup. Kitsch, hair care without compromise.
You certain you got me?
Yeah, come on.
But are you for imprint certain?
No, absolutely.
No lunch.
Certainty matters. At 4imprint, every detail is handled with precision. Logos checked, shipments verified, deadlines met. From offsites that spark new ideas to team moments that build connection, 4imprint keeps your brand looking unified, confident, and on time. That's 4imprint certainty. Visit 4imprint.com.
4imprint for certain.
I like winning on the field, but it's even more fun winning on Deal Dash.
Lori won $2,000 Tiffany earrings for just $1, and Joseph won an iPad for just $6. There's millions of fast auctions, so try today at DealDash.com for $50 of free credit and your first win guaranteed.
Last week saw a lot of major media headlines, including David Ellison's battle to get the Paramount Warner Brothers deal done. I want to start with that. Joining us right now is Rich Greenfield. He's the co-founder of Lightshed Partners. Rich, good morning to you. Let's talk about the state of the state. What happens to this deal, since so much seems to be revolving around it, and whether you think Paramount is going to ultimately be based in California?
Well, you know, Andrew, I think the real thing to think about here is you're at an impasse. Paramount wants this deal done sooner than later. The government is obviously in no rush, or I should say the governments. You have 12 states suing to block this transaction. Paramount, not just, I mean, the ticking fee obviously is something to think about, but I think the bigger thing is Paramount wants to get this deal done because they want to integrate. You know, they sort of have started obviously making changes at Paramount, but if your plan is to buy Paramount and Warner Brothers, there's a tremendous amount of cost cutting and duplication that you have to deal with. And so you're sort of in this limbo phase. And I think the problem is you've heard from the AG of California, they want structural remedies. Paramount keeps sort of talking about behavioral remedies. It's almost like they're talking over each other. And I don't know, you know, I don't see what changes this until Paramount, most likely, because they're the one in the rush, until Paramount comes to the table with some meaningful structural remedies.
So Rich, let's talk about what those structural remedies could be. One of the ideas that's been bandied about is could they stand up effectively a competitor on the studio side? Are there assets with which they could contribute to, or effectively sell rather, to somebody else, maybe a Sony, maybe an A24? Could you get some private equity firm involved? And is that something that would be attractive enough? What do you have to do on the cable side? Are there channels that you'd be willing to sell? They've said CNN is not on the table.
So here's the problem. The fundamental problem of this deal is there's sort of three major assets that you're buying, right? You're buying HBO Max, which is their streaming platform. You're buying a major film and TV studio, and you're buying a large group of cable networks. There is no easy way to not buy another studio and still get a lot of the benefits. So could you peel off some of the properties you mentioned to private equity or an A24? Could you take something like the DC Comics franchise or the Harry Potter franchise, or the biggest movie, one of the biggest movies of the year coming out in December is going to be Dune? Could you take the Dune franchise? So maybe you could take a chunk of IP and literally sell it to someone along with one of the two lots, both Paramount and Warner Brothers. Now, there's a tremendous amount of the cost savings disappear if you do that, Andrew. And so would Paramount even be willing to do that? I don't know. And you know, and the challenge here is going to court with you already have a judge that did not seem terribly friendly to Paramount. The danger is you get a negative ruling and you don't have enough time before this deal drops dead in June 4th. And so do you propose something that's painful, like getting rid of some of that IP? Could you take a group of cable networks? Forget about just selling CNN. Could you take the Turner networks, which include CNN, but TBS, TNT, and just basically take a whole batch of cable networks? But therein, Andrew, lies one of the bigger problems.
Those are cash machines at the moment, which I always thought were required effectively to pay down the debt. Meaning the reason you were taking these linear channels to begin with was not a strategic rationale, it was a financial rationale. If you don't have them...
And it gets worse than that, Andrew. Andrew, first of all, you're 100% right. Wait, you're 100% right. But let's just take it one step forward. Let's just say Larry Ellison could cure that by putting in more cash, right? Like, there's always a way to cure leverage by putting in more cash. But the problem you would run into is you'd be buying these things for, 10 times, if you think about the blended multiple of this transaction. And look at the Hearst transaction. Hearst just bought Disney's half of A&E. Or sorry, they just bought out Disney's half of A&E, and they did it, at 3.5 times EBITDA? So, this would be a very, very dilutive transaction, not to mention what you're talking about, Andrew, which is you sort of need the cash flow to pay down the debt of this combined transaction. So this is the problem. Like, this is why Paramount wants behavioral remedies, because they need all of these assets to make the math work.
Walk us through. I know we only got 2 minutes. What would you do if David Ellison was sitting here at the table with us, and you could say, David, I have an idea for you. This is what you got to do. What would that be?
You take all of the Turner nets. So you take TBS, TNT, and CNN, and you put them into a separate company and you spin them off. Maybe you put it up for sale and you take the dilution, probably just try to replicate the split of the company, sort of in the way that the Warner Brothers was trying to do even before this. And so you're basically buying, you're not buying as many of the assets that you thought you were buying. And then you have to take a group of IP, as painful as it is, but take a group of IP. I don't care whether it's Mission Impossible and Transformers, or whether it's, Harry Potter and the DC franchise, but you have to find some meaningful studio assets. Otherwise, you're going to end up in court.
It sounds like a pipe dream. I just don't know if they'd be willing to do that.
What's the alternative?
I don't know. The question is, do you think that they would be willing to walk away? That's my final question for you.
With they have $7 billion or 7 billion reasons not to walk away, Andrew. To pay a break fee of $7 billion after you've already paid a $2.8 billion break fee to Netflix seems crazy. Now, are there many other things that Paramount could do in terms of investing in themselves to get to scale? For sure, it'll take longer. Ellison always thought this was the only way to scale up quickly, and so I think they will, when push comes to shove, if they can't get the governments to engage in a behavioral remedy settlement, I do believe sometime between now and March, I don't know when, but some point, they're going to come up with some meaningful structural remedies, because I think going to court feels like suicide.
Rich, thank you. Appreciate it. Talk to you soon.
Thank you.
All right, it is 8 a.m. on the East Coast, and you are watching Squawk Box right here on CNBC. I'm Becky Quick along with Andrew Ross Sorkin. Among our top stories this morning, President Trump threatening to bomb Oman if it gets in the way of the U.S. blockade of Iranian ships in the Strait of Hormuz. The president making those comments on Fox News. He also said he's in no hurry on Iran and that the country should wave the white flag. China's economy slowing in July. Consumer spending stalled and urban investment contracted at a faster pace while unemployment ticked higher. And we're watching shares of L3 Harris. The company's chairman and CEO, Chris Kubasik, is out after the board said it became aware of certain conduct that was not consistent with the values of the company. It did not elaborate on what that conduct was. The company has appointed insider Sam Mehta as CEO effective immediately. You can see that stock is off by about 3 1/3%. Let's get a check on the oil markets right now. We've been watching this morning, and right now it looks actually flat for WTI. It's trading at $82.36. Brent is up by about 28 cents to $88.80 a barrel. Joining us right now with more on the energy prices is Clearview Energy's Kevin Book. Kevin, good morning. Good to see you this morning. So what do you make of oil prices? We're up about 5% over the course of the last week, and it does not look like there is any resolution on Iran in sight.
It does not. Last time I was here, we saw risk to the upside, so I don't want to sound like a broken record. However, we'd expect a slow upward creep, even if there isn't more kinetic engagement. As inventories thin. This would be, I guess, the day 60 of the Memorandum of Understanding if it were still intact or functioning. But it's closing in on day 180 pretty soon of active kinetic and economic conflict. And last week we had a big rhetorical back and forth over who controlled the strait. I think the real question isn't necessarily more important who controls it, but how much oil is going through it, and it still doesn't appear to be flowing as it was.
I mean, I'm actually surprised that oil prices aren't higher, given all of that. What keeps things at bay? What keeps prices down, relatively speaking, from where they could be?
Well, I think we could get them higher with kinetic engagement. Obviously, that's happened in the past. And they might not stay there, because when we look at the oil price, we're not really looking at the overall scale of the shortage. A lot of that's borne out in the products prices. So if you look at the gas oil price in Europe, or even the diesel price on the road here in the United States, you can see that it's finished fuels in short supply, where we're really feeling the shortage. The irony, of course, is that if oil isn't going to refineries to be refined, then you get that skew. You get more rise in the refined products and fuels prices, and not as much increase in the crude price, because it's not all being consumed as it was.
Where are we just in terms of diesel prices, in terms of jet fuel prices, both in terms of how far we've risen, but also what the inventory situation looks like?
I mean, we're $1.50, $1.75 diesel price versus pre-war and a year ago, sort of comparables. And, that's a pretty significant inflationary concern as we look out at both the harvest and the agricultural use of diesel fuel, as well as the transit and transportation of freight going into the holiday season and other aspects of a consumption-based economy. So pretty significant, and not obviously going to abate until there's more access to the refined product, more operating refineries in Russia, more exports from the Middle East.
So you're pointing out Russia. It's not just the Middle East that's the problem here. It's the increased activity between Ukraine and Russia that has taken out some of those very refineries that you're referring to. Is that something that can be fixed? Or, look, that's a situation where a lot of that is outside our control.
Yeah, there's another energy war going on in Eastern Europe, and there's two aspects to what's going on with regard to those refineries. The first, obviously, is that Ukraine has become more effective in targeting them with drones and has now struck a lot of them, particularly the ones in near range. But the second is, if you go back to the Biden administration, the sanctions put in place were designed to slowly degrade Russian petroleum production and revenues. But that slow degradation means that it's difficult for Russia to source the materials to repair some of these refinery components, particularly when the high complexity features of the refineries are being more effectively targeted by Ukraine. So that prolongs outages.
You know, Kevin, I'll come back to this question. With all of these concerns, this wall of worry, markets have maintained some composure, I would say, the energy markets, given everything that's happening. We have talked recently about how China has been not buying as much energy, and that's been a big part of it. What else is happening that kind of describes why this isn't a bigger flashpoint from a supply-demand scenario?
Well, there are two principal shock absorbers that have been taking some of the risk out of the market. The first, as you mentioned, is China, and a net reduction in imports on the order of 4 to 5 million barrels a day from pre-war levels has been a very big part of balancing things. But the second is also the strategic reserve draw that was coordinated by the International Energy Agency in March. That coordinated action of more than 400 million barrels is now, by the IEA's own reckoning, more than 75% allocated into the market, distributed into the market. And so for that reason, as you get closer to the end, you also tend to see a flow slowing down. The US SPR, for example, over the 4 weeks through August 7th, most recent data point on record, is averaging about 600,000 and change barrels per day of outflow, which is about half of where it was at the end of May. So we're petering out on strategic reserves, and there's questions of whether China will continue to be the shock absorber it was.
Kevin, I want to thank you for joining us today.
Thanks for having me.
Coming up, stocks on the move, including a couple of names in the chip sector. Squawk Box coming right back after this.
Welcome back to Squawk Box. Here are some of the stocks on the move this morning. Let's start off here with shares of Micron. That stock up nearly 3% pre-market following a Wall Street Journal report that Commerce Secretary Howard Lutnick urged Apple not to buy memory chips from China. Apple has been testing Chinese memory chips to help alleviate the supply crunch. Micron shares up some 250% this year amid continued demand for memory. Shares of Intel up 1% after CEO Lip-Bu Tan disclosed purchasing 105,000 shares at $95 apiece. NVIDIA also disclosing Friday that it has a $30 billion stake in the company. Intel also likely getting a boost from Lutnick's comments as the broader chip and AI trade moves higher this morning. Finally, shares of Argentex jumping after its phase 3 study evaluating its experimental drug Vyvgart met its main goal. Vyvgart treats adults with an autoimmune disease that causes muscle inflammation. Patients who took the drug showed statistically significant improvement over a year versus those who took the placebo. That stock up 11%. Andrew?
Okay, thank you for that. Coming up in just a moment, we're going to get you ready for the trading week ahead. And then later, we're going to be joined by OpenAI co-founder and president Greg Brockman, a conversation you do not want to miss. Squawk Box coming right back after this. Welcome back to Squawk Box. I want to talk markets right now, coming off of last week's inflation data with Liz Thomas, head of investment strategy at SoFi. Good morning to you.
Good morning.
We were just chatting during the commercial break. I said, how's the world? You said, do you want to say what you said?
I said, the world is falling apart, but the market will rise.
Okay, so explain that.
So we've got an era of warm inflation. I'll call it warm, not hot. We had some promising data last week. But warm is uncomfortable for many market participants and uncomfortable for the globe because we haven't been in an era like this in a long time. Bond yields are attractive if you want yield, but not attractive if you don't want volatility and if you don't necessarily trust central bank action right now. And then obviously the geopolitical headlines that I don't need to tell anybody about that don't
right,
seem
so
to
you
be
have
going
all
away.
of that, and then you said that the
All of
markets
that.
are going to go up. So
All
this
of that.
This is what I think is has a lot of our viewers saying, well, what are we supposed to do in all of this?
Right. So I already went over the warmer inflation era, the higher bond yields. The portfolios of yesteryear are not working. They're not going to work. So you add something like commodities in, and you've got to hedge against some of that geopolitical risk that's affecting energy. You hope that the Fed doesn't raise rates. I'm on the side that I don't think they will in September. I don't think they will in October. I think the earliest possibility is December.
So you have one, in your calculus, there's one rate hike.
Yes, but I don't like it. I hope that they don't.
Okay.
I think
I only asked because we've had, we had Bank of America, Brian Moynihan was on. Bank of America thinks there's going to be 3 rate hikes before the end of the year.
I would disagree with that. And I think it would look like a mistake if that were the case right now, because first of all, hiking rates doesn't add people to the labor force. And a lot of the inflation issue that we're having right now is a supply issue. Yes, we have very strong AI demand, but we also don't have enough supply to fulfill that demand. Hiking rates doesn't create more semiconductors. And we've got a supply issue in energy that we're all very aware of. Hiking rates does not create more oil through the Strait of Hormuz, right? So I think hiking rates at this point, although the economy is strong, it's stable, it's not overheating, in my opinion. GDP growth is not overheating, the labor market is not overheating, consumer spending is not overheating. We have warm inflation that, again, is uncomfortable, but I think if we start to hike and create a hiking cycle, it kills other things in the economy that we don't want to hurt at this point.
Jim Bullard's point was it's a lot harder to control inflation when you have a bad economy. His thought was if he was still on the FOMC, he would raise rates now. I don't know about how many times, I don't know if it's 3 times, but to try and bring inflation down now when you can do it without it being such a painful decision because the economy's in need of help as well.
Yeah, and look, I respect Bullard. The Fed doesn't call me for my opinion, right? They're more likely to call him. But I think right now, yes, the economy could probably absorb 1 or 2 rate hikes. It's not about 25 basis points or 50 basis points. It's that if they start now, the expectation is that they will keep going until inflation reaches target, because Chairman Warsh has been so committed to that 2% target. So let's say they raise in September, I think markets will expect that they'll keep going until they get to their goal. And that's what I would be concerned with, because getting to that 2% goal has proven to be really, really difficult already for the past several years. I think we would have to hurt quite a few things in the economy to actually get there. So I would prefer we stay at this point, stay at this level, wait and see if things come down on their own while the economy remains strong.
Liz, I want to thank you for coming in this morning.
Thank you.
Appreciate it.
All right, when we come back, we will speak to drone delivery pioneer Zipline. The CEO will tell us about the company's plans to expand in the United States. We have that story next. We'll be right back.
The U.S. is preparing to tell countries around the world that they need to pick a side in the AI race with China. That's according to a Reuters report. It cites a draft State Department letter to about 36 countries saying they're going to be excluded from a U.S. AI coalition if they also sign up for a competing initiative spearheaded by China. Last month, China launched a group called the World Artificial Intelligence Corporation Organization, bolstering open-weight AI technology. Some in the U.S., like Meta's Mark Zuckerberg, have advocated for open-weight AI, but OpenAI and Anthropic chiefly rely on closed technology.
Some news out this morning. Uber is partnering with drone delivery company Zipline to scale up operations in the United States. Joining us right now to talk about it is Zipline's CEO and co-founder, Keller Clifton. Keller, first of all, welcome. We've spoken with you over the years about what you've been doing. I know you started with these drone deliveries in Rwanda, and that was many years ago, back in 2016. Obviously, we've come a long way over the last decade. Why don't you describe what this partnership is and what it means in terms of drone deliveries?
Yeah, of course. I mean, you know, as you mentioned, Zipline has been building autonomous logistics for the last 13 years. It was only last year, January 15th, that Zipline actually started doing autonomous deliveries across the U.S. And you know, we've been a bit shocked by the speed at which that service has grown. We grew 10 to 15% week over week, most weeks last year. And so what we're announcing today is this partnership with Uber to scale to 1 million deliveries a day. You know, 1 million deliveries a day is it represents something like 10% of total instant deliveries being done in the US. But what's interesting is the early customer data that we've observed in Dallas indicates that when you make this kind of delivery way faster, way less expensive, less traffic, less pollution for our neighborhoods, people significantly change their buying behavior. A lot of Zipline's customers are using the service every single day, and this means that there's actually an opportunity to grow the size of the instant delivery market more than 10x over the coming years using robotics and physical AI, you know, and build a service that ultimately saves people time and saves people money.
I mean, it still looks pretty futuristic to see the videos that we're watching right now of Zipline having a drone come in and drop you your Uber Eats right to your doorstep. I have to admit, I have not seen that to this point. When you started drone deliveries, I think it cost something like $300 a delivery. You've gotten that cost down to what at this point?
Yeah, you know, it's funny. Whenever you talk to a hardware entrepreneur, I think that, you know, I often ask the question, it's like, cool, how much do you think this is going to cost when you launch the service? And however much people say, I always multiply it by 10 in my mind. And this is exactly what happened at Zipline when we launched the service in 2016. We initially started by delivering blood transfusions and vaccines, and so we were lucky that we started with these life-saving, you know, safety-critical use cases that meant that we actually were able to take a decade to travel down that cost curve. At this point, these kinds of deliveries are not just cost competitive with doing a delivery using a 4,000 gas combustion vehicle, but they're way faster, they're more reliable, they're cleaner and quieter for the neighborhoods that we serve. And frankly, they just result in a better customer experience. I mean, you can kind of imagine, you know, if you're ordering something from either a retailer or from a restaurant, having something delivered in just a couple minutes, the quality of the experience is way, way higher. You can rely on it. Today we deliver from 6 a.m. to 11 p.m. Soon the service will be operating 24/7. And when you can get something delivered in 2 or 3 minutes, you know, food tastes better than it does if it's 30 or 40 minutes cold arriving at your doorstep.
And it costs what? It originally was $300. You've gotten it down to what, about $12, or am I off in the numbers there?
Yeah, you know, the delivering with a 4,000-pound gas combustion vehicle can cost anywhere from like $8 to $15, and so, you know, it's totally different in different metros and different states. But that is the range that this technology is now operating in, and ultimately over time, this will be not only 10 times faster, but significantly less expensive than using a human driving a 4,000-pound gas combustion vehicle.
I hear your point. You've made it a few times, driving a 4,000-pound gas combustion vehicle. You know, we all have Amazon delivery trucks in our neighborhoods. We have Uber cars that are coming through. You see all of these things. And I hear your point that a drone is less intrusive, it is quieter, maybe safer than having one of these cars or trucks flying down the street if you've got kids playing on the streets. But when you start talking about 1 million deliveries a day, I do get a little concerned about the air traffic, what that could mean. You've done a lot of these deliveries. What's your safety record to this point?
So Zipline has now flown over 140 million commercial autonomous miles, and we have done that with 0 safety incidents. So just to put that into perspective, if you were to drive that many miles in the US, that's like driving every road in the entire United States 5 times over. And if you were to have a human drive that many miles, you'd have something like 600 accidents, 100 injuries, and multiple fatalities. So we actually already have the data to know that these kinds of systems are way safer than their traditional the default that we've been using to make these deliveries. Not only that, these aircraft that you can see behind me, we now have individual aircraft that have flown more than 1 million commercial autonomous miles. So a lot of times people think of this technology as like sensitive or fragile. The average car is only going to drive 150,000 miles during its lifetime. And so these kinds of systems are already not just safer, but they're already a lot more reliable than cars.
Keller, thank you for your time. Eager to see more about how this works out, but we appreciate you joining us today.
Yeah, thank you for having me.
Coming up in just a moment, we're going to talk about AI expansion, cybersecurity, and so much more. OpenAI co-founder and president Greg Brockman, right here on Squawk Box. That is next. And tomorrow, we're going to bring you a rare and exclusive interview with the CEO of Hims and Hers. We'll show you that as well. Squawk Box, and right back.
All right, Rick Santelli is here. He joins us with some breaking economic news. Rick, it's good to see you.
Yes, good morning, Becky. This is an August release of Empire Manufacturing. You know, in and around New York, the Empire City. And it's also one of the first August economic indicators, so it's always a fresh look. 20.6 is the number. It's double expectations of 10, and it will be the strongest read of the year. As a matter of fact, it will be the strongest read going all the way back to December of 21. December of 21, when it was over 34. That's how long of a stretch it's been to have a number over 19 and change, which was our high watermark this year in May, other than this number. And of course, there's a lot of things to point out going on this morning, Becky. If you look at bond yields in Europe, they're around 320 for a 10-year bond. That's a fresh 15-plus year high. If we look at what's going on in Japan, their 10-year JGB is now over 290, and that is a fresh 30-year high. The dollar index is at a fresh 3-month low, and the dollar yen, after intervention, is still hovering above 159. It did get down into that 155 and change area. I'm referencing the dollar, of course. Kind of 164 and change is the high water mark. But we want to pay attention to all these moving parts, because as we discuss, and as you discussed with Jim Bullard, trying to handicap what we're going to expect from the Federal Reserve is getting a bit more complicated. But we have a lot of different parts of the global economy to look at to give us clues, and summarizing all those clues is a CME index, Fed Funds Index tool that gives us the probability this morning hovering right around a 1 in 3 chance of a hike at the next meeting. Becky, back to you.
Rick, thank you. We'll see you later.
Okay, we've got an important interview now. Joining us in an exclusive conversation, Greg Brockman, OpenAI's co-founder and CEO, just published an essay about cybersecurity, warning really about the dangers of all this, but really what needs to happen now. Greg, it's great to see you this morning. There's so many questions about where we are in AI, which we can get to, but I want to talk about the cybersecurity piece, because you really speak to this idea of us being at an inflection point that may be underappreciated.
First of all, thank you for having me, Andrew. And yes, we are in a window right now where we can see a little bit into the future. I talk to a number of organizations, going to conferences, talking about cybersecurity, and everyone feels that we are in a moment where cybersecurity fundamentally needs to change. Every organization needs to up-level its cybersecurity practices. But many people don't know where to start. And I think that no one is really talking about this message publicly. Everyone kind of feels it, talks about it in closed rooms. But it is important that we, as a country and as a world, really take the moment seriously. So the OpenAI Hugging Face incident, it was one moment we got to see into the future. You could see how automated attacks are going to become possible, that these will be capabilities that will be in the hands of threat actors in upcoming months, because this technology is being created across the world by many organizations. But defenders have a moment now where they can change their practices, where they can up-level everything that they're doing. And I think that fundamentally what's going on is that we're learning that human written code is full of vulnerabilities, that there is tech debt that's building up over time, and that we can actually, the same tools that are going to be potentially used to find those vulnerabilities and exploit them, they can actually find them first and fix them. That's why defenders have an upper hand, have an advantage, but need to lean in. So we are talking about the practices that we're using at OpenAI. We are very urgently moving to up-level everything we do, but also lessons that apply to the general industry and tools that can help make everyone more secure. So we believe in the long run that defenders can really win here.
Well, so that's the question. Can defenders really win if, in fact, and the Hugging Face story was, fascinated a lot of people, scared a lot of people, because it fundamentally showed that at base, underneath these models, if their guardrails are not on, that they will go find, cheat, lie, do whatever is necessary to break the code, if you will.
I would say that there are two pieces to Hugging Face. The first one is really something about how we develop and evaluate these models, and that's something we've taken extremely seriously. And so we're also talking today in a later blog post about the different defenses that we have introduced, the way that we've up-leveled safety, security, alignment in our development process. And that is absolutely critical, that you want models that are really aligned even when they're contained and even when you're developing them, that's a real shift, that now the models are capable enough that it is important for us to be applying all these techniques that we've been preparing and really thinking about for the past decade since we started OpenAI, that we're bringing it all together as part of one unified engineering process. But there's the second piece of how Hugging Face has showed how AI automation of attacks are going to be different from human ones, because AIs have very different strengths and weaknesses. And one takeaway is that lots of small vulnerabilities that humans kind of leave around, credentials that either are overscoped, that got exposed on the internet, that people don't really remember, the little flaws that you have in your system, the credential you didn't roll that you've been meaning to, all of those are harder for human attackers to chain together. But for AI, looking through lots of different pieces, able to chain together to an objective, that is something that is much easier. And so I think that what we're seeing is that we have had too lax of a standard as a cybersecurity field. And I think every cyber defender kind of feels that. Everyone has those, I have this thing in the backlog, but I have so many priorities and so many different stakeholders to align. And now is the time to act. Now is the time to say, it will no longer be sufficient. And this has to be prioritized, I think, as a top level priority in every single company.
Greg,
and we're seeing it.
Let me ask you this, though. When Anthropic had its incident and you had yours, there were some people who said, oh, this is a flex. This is marketing. Because what's effectively telling everybody is they now need to go buy either OpenAI service or Anthropic service to secure themselves. What do you tell those people?
So our responsibility is to really show the shape of the future. That's part of the open and OpenAI. We really believe this technology is something that will up-level everyone, uplift everyone. People can use it to build a better life. But we need to point out what we see coming. And sometimes that's positive and sometimes that's mitigation of risks. And in this case, we saw something in how the system was interacting with the world that surprised us, but that we also felt was very important information to provide to others. And it is absolutely true that AI is both changing the sides of attack and defense. It is something that is reshaping how really the whole economy runs, with cybersecurity as a specific instance. We definitely provide the most advanced cyber capabilities, and we try to put those in the hands of defenders. We have a trusted access program so that we're able to differentially advantage defenders. But it's not just us. This technology is being created around the world, many different companies, open weight models, closed models, lots of different tools that people are building on top of it. So it's really an entire community that are building these tools, and we think that together we can make the world more secure.
Greg, let me ask you a broader question about what's happening at OpenAI right now, because there has been a number of departures that have been very visible. Fiji Simo at the top, but your CRO was effectively left and then was replaced last week. Brad Lightcap, who'd been at the company for a very long time, been the operating chief for quite a long time, left. The head of ethics after about a year left. What is happening right now, and what should the public take away from this?
Look, I would say that the number one thing that we are doing is we're really focusing, right? That we have a strategy, a mission, and a set of priorities that we're executing on. And throughout this whole year, you've seen the impacts of that we've really been trying to figure out how do we bring together our consumer and enterprise business to be really unified, and you've seen that with things like ChatGPT Work. You can see that we're at this inflection point as a business. In July, our revenue grew 20% month over month. 32% of that is, within just the enterprise category, 32% growth there. So you can really see that we are moving to create the best possible models, deliver value for our customers, and to really try to scale systematically to every
But Greg,
business in the
just
world.
so we're on the same page, because I think people are looking at this and they're asking questions. The Chief Revenue Officer, obviously a hugely important role. I think people are saying to themselves, you hired somebody for that role, they left and you replaced them. Was that because they weren't doing it right and so you wanted to replace them? Is that because they didn't like what was going on and they wanted to leave on their own? People asked the same question about Brad. They asked the same question about Fiji, who I know had health issues but is not returning and is starting her own thing. I mean, can you speak to this?
Yes. Look, I'd say fundamentally that the way that the organization, we're a very resilient organization. We've been through, if you look over the years, that there have been different eras where we have different sets of leaders in place. I'm a constant, Sam is a constant, and that I think that we are stronger because of that resilience and diversity. And I think what I would say is that my view has always been that I try to work with the best people for that moment, and that we have people who have been here for a very long time, laboring behind the scenes, that don't make the headlines as much. And so maybe my core thing would be, I actually think that the difference between OpenAI and other organizations is that we are so much in the spotlight, so every departure gets scrutinized in a way that it doesn't otherwise. I actually don't think that it's actually that atypical, kind of how we operate and the longevity of people. But I would say that we have an amazing leadership bench. I'm super excited about the team that we're working with, and that just over the past year, I look at the set of leaders that I've had the pleasure of really being able to elevate and continue to work with and will work with for the long term. And I feel extremely good about that bench and where we're going.
Let me ask you a different question about the economics of AI right now, because obviously it appears that Anthropic's going to have an IPO later this year. I want to talk to you about the prospect of you doing such a thing in 2027. But it appears that the valuations of so many of these different tech companies are quite dependent on your own valuations, and not just what they are today, but that they have to continue to rise because embedded in some of their own economics is your very company. And so I'm curious sort of what you're seeing in your own business, but also, you know, just last week, and Becky and I have been talking about it, she had this great interview with Jensen Huang and a whole bunch of financial leaders who are going to be contributing potentially up to $500 billion to support this whole world. And there's a big question mark about whether these chips and these data centers are going to have the value that's needed to make all of this work.
So I'd say at a fundamental level, what we are doing, and you can look at this across so many different verticals of the economy. You can look at, we just talked about cybersecurity, which I think is an absolutely critical application of AI, and I think we're going to see lots of growth there. Software engineering this year has been totally transformed. We're starting to see every aspect of knowledge work really change, but also we're starting to see scientific discovery. We announced a couple weeks ago that our AI, for $2,000 worth of compute, was able to solve 10 long-standing math problems that had eluded mathematicians for decades. And think about that level of capability applied to biology, applied to material science. It's all starting to happen. And so all of these applications that we're starting to see, they're all powered by one fundamental resource, which is compute. Compute is really becoming the new oil, the new limited resource of the AI age. And our belief, you need to believe one fundamental thing, is that because AI is really about solving problems, the problems that humans want AI, want to be solved, you need to believe that the demand for problems to be solved is unlimited, right? And that is something I believe, and that is something we have seen, that we have 1 billion users on ChatGPT, we have 2 million enterprise customers as well. And you can just see that the depth of usage as people have started to use agents is just going off the charts. Like every single company that tries these things, you start to realize that you can move in more ambitious ways than you thought previously. And so I think that we're at a world where we see what's coming, we see the shape of the future, because that model exponential, that capability curve, that's continuing. We really have a roadmap lined up where the capabilities will continue to increase in significant ways that are hard to kind of explain in a succinct way, because it is really about being able to add value across every aspect of human endeavor and be able to help empower people to do more. And so I think that if you believe in human creativity, human ambition, then ultimately you have to believe in the power of what AI will provide.
Hey, Greg, I'd like to go back to cybersecurity, if it's okay. I agree with you. There's huge potential promise for AI. I have a lot of hopes about what it's going to do for healthcare. But when we saw the breach that you all talked about last month, where the OpenAI model broke out of the sandbox and broke into Hugging Face, I mean, we didn't find out about that, or you didn't find out about that until after Hugging Face had identified what had happened. They had contacted the FBI. And then Anthropic had to admit that they had a similar sort of situation. I just wonder, do you feel like you have your hands around this situation, your arms around this situation? You know what happened, and you can make sure that something like that doesn't happen again? That to me was a brand new world, and do we have any control over this stuff moment?
Yeah, for us, we took this extremely seriously. So for the past couple weeks that we've been in really full postmortem, take a look at what happened, really up-level every aspect of safety and security and alignment within how we do these frontier training runs. So it's a real moment where we realize that we do need to up-level, and it's not a surprise to us in a fundamental way. We've always anticipated that this moment would come, but I think that when it actually happens, seeing the whole team kick into gear and to be so serious. And so we actually have delayed our frontier training runs in order to ensure that we have the right levels of controls and in place. And I think that is a really important thing, is that we as a field are sort of now at a point where these models are so capable, and that it's a dual-edged thing, because they're capable. It means that we need to ensure that they have alignment during training, that they need to be monitored during training in a robust way, but it also means they're so useful, right? And that is where that economic value comes from, because they are able to solve problems in these novel ways, and that we are
Novel,
trusting
unethical
them.
ways.
Right.
Like that's
Well,
part of the problem. Like this was intentionally a model that was set up to say, okay, if we take off some of these controls, are you guys not doing that anymore? Not saying like, okay, go solve the problem no matter what rules you have to break?
We are ensuring that there's alignment during that training process, absolutely. That I think that alignment is a non-negotiable. And that is something we've invested in for many years, and really thinking about that as an integral part. So you can't separate out capability from safety, security, alignment. These are one thing, one system, one way
But
to build
how do you
it.
think about that in the context of the idea of all these open weight models, which won't have these controls? And you have the whole industry really in the past couple of weeks all of a sudden embracing open weight models.
I think that open weight models are an important part of the ecosystem, because at a fundamental level, you have two directions you can go with AI development. You can either say, we need to centralize all of it, have one way of, one entity in control, maybe one person in control. That is a different kind of risk, right? But you could then say that you're able to mitigate this question of, hey, there's all this uncontrollable action happening. I think that world is a very scary one. The flip side of saying, hey, that we want to distribute much more, we want to have distributed power and ensure that there isn't this concentration of power, that to me feels like the right outcome, the right long-term answer. But it also does mean that then you need to think about the fact that there are misaligned actors out there, right? People don't all want the same thing. And so how do you ensure that there are standards across this? And I think that's the important question. You can actually see this with things like Demis Hassabis talking about the FINRA-like organization, and really thinking about how do we, as we move to frontier AI, govern that technology, ensure that as it's being produced, it's safe, but also really distribute power. And so I think that there's different levels of capability. I think the fact that the frontier labs have capability that's peering a little bit into the future gives us information. And I think that the system that we're setting up right now, to me, feels like it balances these questions, and these questions of control and distribution of access.
Greg, President Trump's going to be meeting with President Xi Jinping in September. Could you imagine them agreeing on an actual framework for all of these models, so that we have there's a global body effectively that regulates these models?
I absolutely think it's possible, and I absolutely think that it's important for us as a world to really lean in together and say that we have shared interest here, we have common interest here, to ensure that the technology is something that uplifts everyone, empowers everyone, and helps create the value that is possible from it.
On the open weight models, is there any worry on your end that this could effectively break the economics of the frontier lab models?
I think that there's a bit of a misnomer, or sort of a confusion in terms of what open weight models represent, right? Because open weight models and cheap somehow cluster together for people, but it's not actually true. If you look at that Pareto frontier of task performance, so what's the cheapest model for any task, that we actually win there. And we did an 80% price cut on our model Luna, and now we saw that the volume associated with it went up by more than 5x. And so you can really see that people are voting with their wallet. And there's really two segments of the market. There's the more price-sensitive, smaller models, and then there's the frontier models where people are not price-sensitive at all. And so for us, it really just comes down to, can we produce the best price-performing models? And we have an advantage there, because we have the whole stack. We're able to integrate everything from the chips, data center, all the way up to the model, the architecture, every single piece to produce those efficient models.
Talking about the stack and chips, one of the big questions is, what is the depreciation schedule of these chips? Jensen is now arguing that these chips themselves and the data centers are an asset class. We were comparing this earlier to cars. So there's always been a market for new cars, and there's also been a market oftentimes for used cars. When there's pressure on, or there's less supply of new cars, older cars have more value. But there's a question long term, what the value of those older chips will be. Some companies are depreciating them right now on a 5 or 6 year schedule. It seems to me that, at least with Jensen and some of these others are talking about, is you would have to be using these chips for a decade or 2 decades long.
I think that there is a shift happening because we classically did look at that at a 5 to 6 year, and it's very evidence from this year is very interesting, where just because there's such compute scarcity that it actually turns out that people continue to use older generation chips at an even higher market price than you'd expect, because people just need that compute. And it fundamentally flows from the demand that people are seeing, trickles down to, well, your supply limited, right? The compute really determines how much you can serve. And so at that point, anything that gives you compute becomes very valuable, very useful. And so I think that there is a shift undergoing, and exactly where it ends up, I think it's too early to say, but what I can definitely say is that the way we looked at this classically is just not going to hold.
Okay, Greg, it's great to see you this morning. We appreciate you joining us. Thanks for the conversation.
Thank you for having me.
You bet. And meantime, we should just bring you some additional AI news. Just out, NVIDIA said that it has now secured land, power, and shell capacity in Pike County, Ohio, to host NVIDIA compute through a partnership with SoftBank's SB Energy. OpenAI, Greg, of course, the president of that company, will be the customer. SB Energy is going to build, own, and operate that data center under a 20-year lease to OpenAI. As part of the deal, NVIDIA will invest $1.5 billion in SB Energy. And SB Energy's co-CEO, Rich Hosfeld, is going to join us tomorrow morning, first on CNBC. We can discuss that.
All right, in the meantime, joining us right now to talk about all things AI is Lo Tony, Plexo Capital founding managing partner and a CNBC contributor. Well, let's just start with what we just heard from Greg Brockman. What did you think about it?
Well, I think Greg is an extraordinary executive. Those are the right questions to ask him, because the ones that are at the top of investors' minds are, I just had one of our LPs sent over a note from an opinion about, is AI getting to the point where it's untenable, it's too scary? And so those are the right questions to ask. If AI is starting to act on its own impulses, how do we think about providing the right controls and regulatory framework to make sure that we don't have rogue activity? And then obviously the capital spend as well. I think the Wall Street Journal article over the weekend really has investors thinking, perhaps we are looking at the wrong numbers, as opposed to just solely focusing on the capital spend today. Should we also, and how do we interpret these long-term leases that have also been signed looking into the future that don't necessarily have flexibility to be broken, and will the revenue be there to cover them? So those are all the questions to ask.
You sound a little concerned about valuations. We do have this IPO for Anthropic approaching. How are you thinking about valuations for that? And then how do you kind of play that through into the hyperscalers, into the chip companies, the whole way down the data stack?
Yeah, the beauty of Anthropic is just the fact that it has truly bucked the law of large numbers. The ability to grow 10x over the past 3 years in terms of moving revenue from 100 million to 1 billion, from 1 billion to 10 billion, and what looks like the potential for this year to end at over 100 billion is unprecedented. And so just kind of comparing the valuation, going from, 18 billion when it was about at 100 million in revenues to the current valuation, we've seen 1.2 trillion in the private markets for secondary trading. That's a 54-ish X over the valuation, but revenues are probably growing at, 540X or so. So, I'm not so concerned. I think everyone is looking for the right companies to draw some comparable information. A lot of folks look to Palantir. I think that's a pretty good one. Revenues at Palantir growing at about 80% year over year. It's about a 52X sales or revenue multiple against the run rate that is for the most recent quarter for Palantir. And so when you start to apply these multiples to Anthropic, I mean, you can come down to a multiple anywhere, call it about 25X. And if in October, when everyone expects the IPO to hit, they're at about 80 to 85 billion in the run rate for revenue, then all of a sudden, 2 trillion starts to look fairly reasonable. Now, of course, what we don't know relative to Palantir is what the actual margins look like for Anthropic. We do know that at the end of Q2 as reported, there was a small operating profit, but as your guest from early this morning said, EBITDA is not the same as actual net income. So we need to understand what the margins look like as well.
So you're talking about Bill Eigen from JP Morgan Asset Management, who we had on today
Correct.
talking about the debt structure for a lot of these things too. I'm having a hard time figuring out, on the one hand you sound concerned, on the other hand you say, okay, for Anthropic 25 times might be pretty reasonable to look at some of these valuations. So you'd be a buyer in some cases?
Well, we do hold Anthropic. We invested at the Series D, so that's the round that closed in January of 2024 at the $18 billion valuation. So we're extremely bullish on Anthropic. And I think our thesis has always been the quality of the management team. Dario and team are amazing. Focus on enterprise, as well as the focus on putting guardrails with constitutional AI. The other important component to look at is to evaluate the entire AI stack. Obviously, NVIDIA has done really well at that infrastructure layer for the chips. As you move up into the models where Anthropic and OpenAI's core business is, we do believe that that is a place where there'll be some pressure on the margins. You can see some of that coming from the open models and the orchestration companies are now doing to route the right task to the right model. And so that's going to apply some pressure. But in response to that, what Anthropic did very early on was to move up the stack and go into the applications with Claude Code. And so that provides a place for them to have better margins as well as better lock-in.
Perfect. Hey, Lev, thanks a lot for your time. It was great to see you.
Thanks for having me.
Okay. That does it for us this morning. We will see you right back here tomorrow. Right now it's time for Squawk on the Street. They'll be here after a quick break.
Good morning. Welcome to Squawk on the Street. I'm Carl Quintanilla with Jim Cramer at Post 9 of the New York Stock Exchange. David Faber has the morning off. Bulls coming off 3 weeks of gains, but we are braced for another pivotal week of earnings on a Walmart and Home Depot, among others. Yields new cycle highs today, 10-year 4.71, long bond near 5.3. Brent oil still close to 90 as that MOU between the U.S. and Iran expires today, and the president threatens to bomb Oman. Our roadmap begins with SanDisk and Micron, though, helping to lift the tech sector. According to the Journal, the Commerce Secretary urging Apple not to buy some of those Chinese memory chips. As it prepares for an IPO, Anthropic reportedly posting quarterly revenue up 14-fold from a year ago. And of course, the Iran war, gas prices in focus, the president urging Americans to accept paying $4 a gallon at the pump. Let's begin with the markets. Tech's on track for a positive start at the open, Jim, as August has taken off with the tear, as we know.
Right. At the same time, you got up early today. You saw that bonds were actually tame. And then this Oman interview, Fox, and next thing you know, interest rates are even higher. It's very hard, I think, to climb with interest rates higher, even if we're looking at Anthropic, even if we're looking at SanDisk. It's just difficult because in the end, interest rates disrupt everything.
I know. And that's coming after a tepid CPI,
right,
tame PPI,
right,
a jobs number that was negative, and the worst retail sales since early 05 or 25.
At the same time, though, we know that the government certainly had a bit of a hole there in terms of what it needed to raise. And I just get the sense that there's this overall recognition that there's so much to borrow that it's overwhelming the markets. It's finally happening, and I don't feel like that we should ignore it. I mean, people ignored it on Friday, and suddenly there was this big turn, and it was like, well, do people not see this happening? I mean, like I saw this happen in 1996 and 7, and like, who cares? And then one day they care.
That's usually how it works. And we should always point out it's not just a U.S. phenomenon. Japan today, their 10-year, that's a 4-decade high. France, similar situation, Jim. I mean, this is sort of the interesting conversation of the moment. That what is credit seeing that equities are not, if you know what I mean?
Yeah.
You look at some spreads of CCC borrowers, for example, kind of blowing out.
Right, and I know that the private credit, once again, FT. I mean, I find these articles kind of like, DA probes rackets or something. So you constantly see them, and they're almost evergreen. But what I come back and just saying, we just have I mean, look at the piece, the pyramid piece about the borrowing, the pyramid piece. I love that. It's like, I
think
remember,
we actually built the graphic for
I remember the guy charges you right here, and then there's another guy, and you think that they're all official.
This is in the Journal today, and the argument is that the actual amount of sort of declared AI spend is much larger. It's doesn't account for, and this is, by the way, this chart does not include Oracle or SpaceX.
Right, which would be dispositive of how bad things are. But I just think that there's just too much money being borrowed. But as we get away from the big federal refinancing, I think we'll be more comforted. But every time that oil goes up, the president has to then come out and say, I didn't mean to Oman. I meant like I would bomb Oman. I don't know. Maybe let's hold off on that because he sees oil go up.
Right.
And he can't get it used to $4. I mean, well, why don't we get used to $6? I mean, come on.
Yeah, there's a lot of discussion this morning about actually a fair amount of dark traffic. In other words, ships in the Strait that turn off their transponder for a week or more. And that's actually created a relatively, surprisingly healthy flow of crude.
Well, plus, I mean, we're still getting the drawdown of the Chinese SPR. Our SPR, now we're seeing that the salt caverns are damaged by too much oil. I remember when they were by too little oil. I remember when they were going to be damaged by too much oil. It doesn't matter. It's damned if you do it, damned if you don't, for those salt caverns.
Yes. Yeah, we're getting to levels where they're worried about the operations of the SPR, for example.
Well, okay, so I was reading RBN, which is just this great publication about oil. We've now had 3 new pipelines that transport natural gas to the Gulf. Natural gas is the byproduct of oil. We're going to see another spike in how much oil we produce in the Permian. This is like a Chevron. Someone cut number Chevron. What the heck? They cut the price target. Chevron's like crushing it. What are you cutting it? We just had them on.
Yeah.
But anyway, you just know that we're going to see a big step up. We're also going to see a big step up in Venezuela. It's actually happening. So there are places where we're getting a lot more oil, but they happen to be U.S. controlled.
Yeah, actually, Bloomberg's got a big think piece today about how the locus of sort of the pivotal production moved long term from the Middle East to the Americas.
Yeah, I mean, we're discovering a lot of oil in the Bakken. Now, people had written off the Bakken 17 years ago. But, man, the Bakken is now fecund. So I really just think maybe we're a little luckier than we think. We have a lot of oil in this country, far more than people realize. But the natural gas story is the real king because you'd have to flare the natural gas, and our country's against flaring, in part because it's one of the worst things in the world other than coal.
Right. So what was you had a club meeting on Thursday.
Yes.
Where I assume you talked about energy, which, by the way, energy names are having their third best year, I think, since the 90s, year to date. But you must have gotten into tech as well.
Well, we spent a lot of time, first of all, I just don't think, I think I was hung up on the idea that you should have an oil hedge and whether that works, and it would be Chevron because the yield is sacrosanct, the dividend. But we were mostly talking about how you can't dismiss the Sandusky interview. You got to just say that these entire cycles where they change the way that they, these long-term arguments, this so-called new business model. I mean, these things sound like, it's like, let's get out. It's like FDR, I'm waiting for the Civilian Conservation Corps of Seagate. These things are rather incredible because what they're really doing is saying, listen, we have to have contracts. We can't just be sink or swim. And what's really amazing is they're showing discipline. I mean, even as recently as 2 years ago, they showed no discipline. And now, like Sandus, discipline, by the way, means we're not going to build a lot. And that keeps prices.
Yeah. We talked to Dave Geckler. We missed you on Friday.
I had Geckler on when he first suggested this, and I was like, yeah, you're going to show discipline. That was... I was laughing at the wrong guy.
I mean, he pointed out two things. A, they've changed the way that pricing happens, the sort of frequency of pricing negotiations. But then there's also this structural notion of how much more quickly technology seeps out into the landscape. Take a listen to this.
Big focus. The focus was around training. Roll forward 18 months, and I think we've just seen an explosion in the market around inference. Right now, we're deploying AI globally. Luckily, as a society, we have very big hyperscale companies that can deploy new technology very quickly. I mean, I think this is one of the things that's happened in the last 10 years is we just have this frictionless deployment of new technology through a cloud that all of us can access.
That kind of explains why these run rates at Anthropic, for example, changed so dramatically.
11 billion? Yeah, and everyone has to have this. I think what's so significant, I wrote a piece about this weekend, think piece for the club, is that we've never had to go in and buy companies that are with stocks that are up 600% for a year. We always want to say we've missed it. I mean, amazingly, bizarrely, maybe there's another big leg. And people are betting that there is, but the perception among the so-called, the cognoscenti around here is that, nope, you missed it. And I'm now beginning to wonder, maybe that big decline from 2,350 to 1,600 is actually 1,400.
Yeah.
Maybe that's that situational awareness, and you have to buy it. And by the way, I was trying to figure out these 13 Fs, which everyone's deeply focused on. Remember, the 13 Fs are not current. And, I hear, we all know, for instance, that I think the finest hedge fund, Appaloosa, that is Tepper, we all saw him, apparently dump a lot of his holdings, reduced a lot of holdings at the end of June. But I believe that Appaloosa bought a lot of the situational awareness stuff. And that therefore these don't pay any attention to 13F.
Right, so the Jane Street headlines from Friday night are 6 weeks old, and your point?
Yeah, let's forget it. And if you're selling SanDisk because Tepper is selling SanDisk, I'm willing to go as far as to say you're an idiot, because I think he rebuilt the position. And why? Because he's a believer, as I am a believer. I just think that you can't, for the first time ever, I think if something's up 200%, you didn't miss it. I've never felt that way. I'm not even with Digi. That was a stock that was like another one of these phony stocks going up because of pre-internet.
Yep.
I have never seen it pay to come in on top of a 500%er, and yet I actually think it's going to work.
I know. You wrote this morning that the discussion is so much, as you say, about how much these companies are spending, and you haven't seen much written on why they may not be spending enough.
No, I mean, take a look at what Elon Musk was tweeting this weekend, that memory is basically the new gold rush. And
in the agentic era, that's what he said.
If I were one of these companies, I would reverse integrate and just say, listen, I'm going to do everything. I'm going to actually be like Lamb, and then I'm going to be like SanDisk, because I don't see any way out. SanDisk is in control of the situation, and they've got the new business model. And I think people are saying now they're going to just wait. They're going to put up that incremental factory, and prices are going to get crushed.
Which is the way it's always been.
Yes, and you're going to get annihilated. And I'm going to say, you know what? Do you remember that hedge fund that bought a lot of SanDisk at the top? Everyone's afraid of coming in at the top. In the meantime, I'm thinking, maybe SanDisk at 240. SanDisk was a $25 billion company, and now it's a $244 billion company, and that happened in 2 years, so no one knows what to do. But it is, and everyone just says only gunners are getting involved. But I look at these companies and I just say, I don't know if they do have religion, and they all seem to have religion. I don't know how Western Digital doesn't go higher. And I know that's a frightening concept, and people say, you'll be a tweet, it'll be like a Twitter thing. Kramer, remember when Kramer said that like Seagate was going higher? What a bozo. But I don't know what to say. I'm just saying that like Western Digital, which I at one point owned 5% of, which would mean that I'd be on the beach somewhere having boat drinks. I mean, it's up 195%, and it may not be done. It may not be done.
Yeah, I mean, we mentioned at the top this report that the White House is urging Apple not to buy Chinese memory. Certainly Micron's benefiting from that today.
Yeah, but Apple, there's Tim Cook in Texas opening still one more American manufacturing program, putting one more bit. Tim's almost done. And what do? They get hammered for who they're going to, where they're going to buy memory. When memory, by the way, let's remember that memory is the most jacked up price, and everyone is just supposed to pay the price of Meta's in there buying it, and Google's in there buying it, and Tim Cook's trying to keep the price of a phone down. And meantime, he's opening incredible job-seeking ways of getting people involved. So I think that Tim Cook is someone who should be heralded as someone who's putting more people to work than anyone with a $600 billion American manufacturing. But no, they get hammered because they want to save the price. They want to lower the price of a phone.
Yes. The news flow Friday night, Jim, wasn't all that good. NVIDIA did downsize their guarantee for this Ohio data center.
Yes.
The Oracle, New Mexico, Jupiter, that's going to be about 6 months late due to friction from the state.
But at the same time, Michael Entrader was here, and he's saying a lot of things that are still good. Now, you can say Entrader's talking his book. I think his book's a good book. I would talk about it. But look, NVIDIA, I know that we're seeing them less in some companies. We didn't think they'd do as much. Now, when they were putting a lot of money in, we were told that what Jensen Huang was doing was lazy Susan. I give you money to get it back. Right. Now that he's cut it back, it's bad? I mean, I thought that maybe the lazy Susan stops right here. We used to have one Thanksgiving, and my mom would spin it around, and you'd be able to get the turkey leg if you were lucky. I mean, the turkey leg is, Jensen's passing up on the turkey leg.
Yeah, but that's, is it not, though, an acknowledgement that Jensen sees some market resistance?
Well, I think Jensen is getting, I think Jensen doesn't need to put any money to work at this point. I think Jensen's got from Elon Musk more than he, I think Elon Musk is going to be the biggest buyer, and I think that seminal, that interest in SpaceX is real. Now, I know he's still not in the top 10 shareholder with that gigantic buy, but why do you need anyone if you have Musk? Musk is going to be the biggest buyer of these chips, is my prediction. I mean, I think Musk could take down the whole Vera Rubin if it wanted to. And Richard Feynman's next, whose books I find impenetrable.
Surely you're joking.
Jensen said you got to buy earlier, and I'm like, wow. I mean, what a tough read.
Yeah, NVIDIA did disclose about a $21 billion stake in SpaceX at the end of Q2.
That mattered.
There is a new share unlock on the 20th. This week. That's going to be another 320 million shares.
We're getting used to it. And it seems like what you do is obviously you short it, and then you buy it on the deal, buy it on the stock that gets free, and it works.
Yeah.
I mean, the fact that it works is a testament to basically how ill-advised so many people are. They worry and they worry and they worry. They should be
Well, if you worried at 225 and you got to 105, you probably feel good about worrying a little bit.
Well, I mean, those people, look, that move was a meme stock move. I used to get up at 1 o'clock in the morning to watch them move it up, which was, talk about suboptimal. That's really not a lot of sleep. Yeah. But you would see them they were taking up from 1 to 3 a.m. They were moving at 10 points. Well, that was wrong. And they got crushed. I don't know where they are. Situationally completely underwear. They have the most you got it, whatever. What was he calling? Why did he call it that? How about stupidly aware?
It is a strange name for a fund.
Situation. He was just set up to fail with that name. Boy, when you read his stuff though, he was spot on. And I think he kept down all the software stuff.
It's not about being correct. It's about when you're correct.
Yeah,
yes.
It's about risk control, of which he had none. But I believe that his single most important role was he got David Tepper to buy SanDisk at a much lower price. What's on his tombstone? It says, I got Tepper into SanDisk at a better price. That's his legacy, for heaven's sake.
He's not done. They're not done.
Holy cow.
Yeah. Take a look at the pre-market. A lot more to get to. We'll dive into some of these retail earnings we're going to get this week out of Depot, Lowe's, Target, Walmart. Got some housing news, some news in defense as well today.
Oh, yeah, the defense news is really suboptimal.
Back in a minute. Take a look at some NASDAQ 100 laggards this morning. Workday's at the top. Had enthusiasm about a potential deal last week, getting shot down by at least 2 downgrades today. Deutsche cuts to hold, BTIG cuts to neutral, arguing that those reports maybe were too optimistic.
Yeah, I guess so. I mean, we all feel that we like Neil Bushry, and I think he's improved Workday in his short time he's been there. But I have to tell you that not that much.
Yeah. We'll watch some of that and talk about the implications for SaaS overall. Kramer's Mad Dash and the opening bell in just a minute. Let's get Kramer's Mad Dash ahead of the bell today.
I was listening to Mr. Brockman, OpenAI, and you talk to Anthropic, they're going to say the same thing, that we really have to worry much more about cybersecurity. Now, back in February, we had Anthropic telling us, you don't have to worry because we got to take care of it. And that was ridiculous. Even the insurance companies won't let the same company doing the model, therefore, do the protection. But TD Cowen, and this is a good example of coming in higher, recommends that we buy Palo Alto, which is a club name, and CrowdStrike. Palo Alto 175 goes to 235, CrowdStrike 360 goes to 400, because these are the companies that really, they have the technology to protect us. You know, this is, again, an example. Do you come in at 170%? This is a market that I wrote this weekend is different from any other, because we always heard this, the most dangerous words are this time is different, and you never buy stocks up this much. But we have this problem, and the problem is that the earnings are exploding for these companies, so therefore we have to take their PEs up. Even if we don't want to, we take their PEs up, and the PEs are so low. Well, these are historically high PE stocks, but they're lower than we've seen them. And then when you look at a company like Micron, the PE could be incredibly low. And so what are you going to do? Just say, you know what, this is like Ford Motor and Micron saying no. No,
If
not the recall
if
for my Maverick.
that's true, how do you know when to sell?
All right, that I think that you would sell it if you felt that there weren't going to be any hacks, and yet you look at the hacks and they're so myriad that you say, well, there are still plenty of companies that have not even gone to the cloud or going to the cloud who need to be protected by CrowdStrike. And I would say that is George Kurtz runs CrowdStrike. That is really what he knows is going to happen. You go to the cloud, you need CrowdStrike to protect. They're cloud native, and the business is only 15% penetrated. So I think the answer is CrowdStrike goes higher. Now don't forget, right here is when the great people from Anthropic said, "You don't have to worry, we got you covered." And they took the stock apart. I remember George Kurtz came on Mad Money twice to say this is ridiculous. But then Anthropic was like going around calling people saying, "Hey, you know what? We're your savior. We're your savior. We're the biggest creator of the problem." But it's okay, because in the world we're in, the George Orwell world, you know what? We don't have to worry about anything.
Well, Brockman's point is that the bad actors will have these things in a matter of months. That was what he said today.
Yes, they did. And I know that Mythos, if you go and you read what Cisco's quarter was about, they say you have to protect yourself from these things. I think, by the way, that just to recap Chuck Robbins and Cisco, I thought that his projections were lowball, and I think that stock should be bought. They do have a cybersecurity element. This is pretty good. They also, you got the network between data centers. What an opportunity. I mean, he comes in and he basically just says, "Listen, we're going to do far less than you think." That's Chuck's way. I mean, look, Chuck is really a responsible guy. He's a throwback where he recognizes that if you take the guidance up too much, you're going to disappoint. He doesn't do that. Now, if you look at the disk drive guys, there's no level that they can't take it up. But, you know, they're pretty good too.
Yes. We'll get the opening bell in a few moments. A reminder, you can catch us anytime, anywhere. Just listen to and follow the Squawk on the Street Opening Bell podcast.
I'm here. What the heck do I have that drawdown for? Doo-doo. Do-do-do-do-do-do. Right to support. Right it open. Whoa, whoa, whoa.
A number of this week's earnings reports will give us a look into the state of the consumer. We're going to get Walmart, Home Depot, Lowe's, Target, TJX, among the retailers due out with some quarterly results. We'll start with Home Depot tomorrow, Jim.
Yeah, I mean, now, we done a Ted Decker. He's not well right now. We wish him the best of luck. I think that...
Oh, man, it's already time.
Shit. Is not getting any credit for his...
That sucks.
Which was a series of acquisitions they made. I don't think it's so expensive that we should avoid it. That said, the man who is doing better, and I go back and forth with him, and I admit, is Marvin Ellison. So Lowe's has the individual's doing better than professional, but I actually like both because they're down so low. It's very rare to see Lowe's.
What the hell?
That's a really attractive situation. Home Depot, a little bit higher to me at 22. The one that I want to, and my trust doesn't own this, is Walmart not softened enough that you can buy it? I mean, I think Walmart is... I think you buy it and then you buy it after, because we have not seen what Walmart does have a high PE.
We talk about it all the time.
But I think it's worthy of it.
At the big board on Wall Street today, it's Hims and Hers Health celebrating their 5th anniversary.
We got a tweezer bottom. It opened with 3 black. Well, I don't know about that, but that could be a... Oh, come on, Jim. Coming down a little bit. We got a downward megaphone. Things are a little weird today. What the fuck is this? Okay, we're getting to a head and shoulders right here at opening. SPY. Oh, the wrong one. No. Options chain, 775s. Calls. 3 black crows. I got 5. Well, at least I thought I did. Oh, not yet. Damn it. No, 145. Huh. There it goes. But not much going up. Let's get this guy on real fast. The 1 minute has a tweezer bottom with a hammer. I mean, this looks like it wants to bounce. Two minutes off the shoulder line with a hammer. Intel had some new, is getting pumped by mention. Plus it had them calls last week. I don't know where it is. Huh, dropped on it. I think I'll wait for my setup today. Right now we're at 143 on the SPY. And we went below yesterday's low. No? Yeah, yesterday's low. This is right here. I mean, this is a solid support if it wants to stay. And we've got a head and shoulders. Everything's moving about a second too late. And I don't like that. My platform. I'm going to take off my shoes here in a second. We got 3 black crows on the 2 minute, but we're bearish. I got to keep an eye on that 10 today. This is where I'd take the trade, the old Jimmy would, because we're at 2 solid supports. 3 black crows and then that double bottom. I'm tempted to take it. But it's your shoes. I'm sweating today. Coming down more. Give it a shot here. I'm in it. fuck. I'm up 10%. Come on. Taking your sweet time. And 775 calls. Barry, pull the trigger. I don't like this hesitation one bit. VWAP's on the right. Strategy on the left. I'll take it. Oh, no, I won't. I'm out for my first trade. We hit this over here. We hit the resistance level on my VWAP chart, the old Jim, and I'm trading under the 10, so I don't want to take a lot of risk. Unless this line, unless we're above the 10, then I'll stay in longer. I mean, I can get them cheap here. I'm going to figure out when I got out. I got in at 126 and out at 142. We're still holding support. We got a bear flag. Higher highs and higher lows. $775s, 126 out at 142. I'm gonna go out and get my chargers here in a second before it starts to get hot in my trunk. So far, it's had support on the 2-minute. More drama. Now we might be in a downturn. CNBC started right in this morning. CapEx. Spending, AI. We're so worried. Everything's overbought. I mean, just continuous. This is what I wrote them. I said, the electorate still remembers gas higher under Biden and Harris.
So following the early news from the European Session of Yemen Houthis saying they attacked Saudi military landing ship and 4 escort vessels off of Mocha coast in the Red Sea with ballistic missiles and no Saudi confirmation, Arab news citing Yemen saying any escalation of tensions by the Saudi regime will be met with a reciprocal response.
Well, yeah. Stocks fluctuated. The official Iran is to shift policy defensive to a fully offensive one. These people are real hard-headed. I missed that dip there. I wasn't paying attention. I'd jumped that on that maybe, especially with that hammer. Still above support. Still above support. Trying to break. /ES. We got a megaphone on /ES. This is a bull flag right here on the SPX. Got a megaphone. What did I say? Megaphone on /ES. Yeah. SPX 7780s or the 7790s if we continue. I'm not in. We're too close to the 200 now. But we got 3 white soldiers. Spies at 158.
Minutes ago, to get the US NAHB House Market Index, forecast 33, prior 34.
Will the 10 cross 9? I mean the 20. We got a tweezer bottom on the 3 white soldiers. And I think it'd be too early to jump in it right now, but the SPX, the 70s, 790s. Oak. What kind of mood are we in? The AI productivity payoff is coming. Now the 10 is starting to cross the 20. But we're squeezing between the 200. So if this candle can come back down and create a higher low and stop right there, then you'd get a big fat one. And I don't know if the market wants it today. Prepare ye in the name of the Lord. The 7780s now. It's kind of testing the water. 7777, 777 has to hold. So right now, we got a bull flag. I'm gonna go out and get my chargers. There she goes. $720 to $780. I'm kind of tired today. I've beat my body up pretty bad.
We give the US NAHB housing market index forecast 33.34.
So I might be taking a nap. At least a half hour. SPCX. Are we going to hold the Head and Shoulders on Slashy Yes? Market call the 7780s at 670, 650. Oh, more drama. Get real close. We're bullies. Oh yeah, I'm not going to be able to trade much today. We're bearish right now. Don't trust it. I got out. I'm at 10, 20 bucks. I don't trust it.
SpaceX extending gains, session high 5.8%.
No trust. $23. Woo! I'm gonna make me a little thing of coffee or something. Kind of wake up. Like 3.5 hours sleep. I'm not no 20-year-old anymore.
Well, hello everybody, this is Donald J. Trump. You're behind the markets. If you're a real day trader, go real
shut up.
At financialjuice.com/purchase.
Chop chop.
Save 67% on a subscription. Isn't that one big, huge, brilliant deal? Come on, people.
Come on. Bye. Buy my news.
Going out to the data.
Okay, here we go. Double bottom. Let's see. Could be a closed position. Come on, do the locomotion.
NVIDIA Contour FTs to invest $100 billion further.
Oh, shit.
AI data center in Ohio. 10 seconds left of the data.
I thought we were going to get a little bounce up there.
35, high look forecast of 33.
That was a little craziness. We're definitely bearish now. Oh, we got a trend line. Very slow volume. Come on, you chicken craps. There we go. I'm out. I'll take it.
We have also posted the article from FT, get NVIDIA to invest $100 billion in OpenAI data center in Ohio.
My entries were $5.40 and $5 out at $5.90. SPX. Almost up $300 for the day. And I'm tired. Fast scalps today until we get some kind of bullishness or...
And the report is out on feed free to read through as well for the US NAHB Housing Market Index.
Don't worry, gotta take it fast. If you don't, your money won't last. What's the Jimmy's Vegas code? I have to go back and try to find it. It's damn. I'll ask her here. Seven 80s. I'm not in them. They're at 5, right where I exited, right here, 590. Watch me leave. The 10, we're squeezing, but the 10 is below the 20. So I don't really want to take this trade. I've really got to be disciplined this week. And right now I don't feel very bullish because all the crap I heard this morning. I'll be back. Come on, baby, do the locomotion. We got another triple bottom coming up. 7770 has to hold. IWM's reversing. Triple bottom on the QQQ. SPY, I got 77480. That's a pretty good yin-yang right here at 778930 if we reverse. 778950. Prepare ye in the name of the Lord. Yeah, could have had a good trade right there, 140 bucks on these three candles. That hammer, and that'd be out of the trade right now. 520 to 640, 650. Come on, baby, do the locomotion. I love stocks SS46CB7. Who wants it? I love. Might be about 136. I'm not sure how much it is. Glory, hallelujah. Amazon's down $1.25. Netflix at 77. SanDisk up again. SNXX.
France's 30-year bond yield rising back to 18-year high at about 4.86%.
I had $20 under 20 for
You're
resistance.
behind the markets. If you're a real day trader, go real time at financial.
Hey, yeah.
/.
Please don't try to sell me this. DHT mark below 18 something hit my support. This was going to be a long. Where's she at? We're coming back. Okay, now we're starting to cross. I got one. I got one. The I don't know if it's good. 77.80s. I didn't want that. Whoa. Triple bottom at the 20. I don't know about it now. We're under the 20. Meta's down. Microsoft hit my support from Friday. sideways on Google, and they're all kind of flagging out, just not really much. Kind of like a numbnut day. Nothing's happening. I mean, they were real negative this morning. Again, like last Monday. CapEx. When are we going to see profit? I'm not sure what to think yet. We got 515 on average on 7780s. And the 10 is above the 20, but we're below the 20. So that could cause that thing to start dropping more. Better take a small loss here and retest. I'm not liking it on the old strategy. Yeah, there's too much bearishness. We got a quad bottom counting a wick, but two of them, the body on ain't touching, nor is the wick. NVIDIA is the only tech up. Microsoft down $10. I got to get out of this. This ain't going to work. We got a wedge. And the 10 is just now coming to the 20 there. Oh, that's on the 1 minute. Damn it. That sucked. Fuck. I was looking at the wrong frickin' time limit. How'd I get to the 1? Well, Yeah, we're definitely not bullish yet. Mr. was up this morning. New low on Google. Baba's down. Nothing's hardly moved. Yeah, this is bearish. I should have never jumped in the trade there on the 2 minute. Trim this thing down here. The Bears are in control. Big time. So don't be getting any calls yet. Wide mouth wedge. The market's been open an hour and 2 minutes. Jeez. No movement. Bears are in control. CRMD, Marvell, Wolf. These are all green. LEDS. Come on, baby. We're coming back up to the 63 on the /ES, and we're at the 10. It'll come back down here, watch. We're definitely at a resistance level here. I'm trying to determine if I want to get out of this even, because I don't trust this market. Tell you what, I'm going to get out, and then if it breaks, I'll get back in. I'm out. If it breaks, I'll get back in. $4.90. I had a 515 average. We're forming this is a bull flag. In fact, I got that wrong. That was on the 1 minute when I did that. Come on. Well, shoot. I've been green. $20. Go back to retest previous resistance on the 2 minute. Retest. $19.05 for SNXX. We got a squeeze going on slash ES between the 9 and the 63 EMAs. Ah. Very bearish today. Now we're below supports. The Bears are out. Three black crows right here. Yeah, it's bearish. Bearish. As the wedge starts tightening up, if it stays in the wedge boundary here, new low slash ES. $7,770. Real close to it. The VIX is down. I don't see much bullishness at all. The only good thing I see is this breakout, and we're down to 4, and we got 3, so we're in the sweet spot on the 2-minute. But as far as trusting nothing, nah, not yet. Just frickin' bull flag, and it's not very bullish. One hell of a water break. Reddit had to pull back. Break it. Blake it. Oh, come on. It ain't gonna do it. We're at a resistance, and we're bearish. We're at a standstill. Think they want to push it. Just get a big break it. We're at resistance. Be nice to get back up here to the 77.81. Better get out now. It's just when it gets exhausted, then finally give up. The bulls will give up. Yeah, I think they're going to give up. Smart traders in here today. Bank it. Unbelievable. That's what you are. So damn close. So close. And this is it. Bitch. It's so close. I mean, it was there. We're above the previous resistance. We're squeezing between the 10 and the 20. I mean, I really like it here, but damn. It's stretching it out. My big problem, I should have grabbed 3 of them right there. Somebody just got out at the bid. wasn't squeezing on my old one, but that 63's been a toughie on the 1 minute. It's taking too long. I might just sell them and wait. This pressure's killing me. Come on, baby, do the locomotion. Pretty tight right here. There, finally, some movement. Crack it up. Now this is when the hard part about getting out. Especially this kind of market. We had to retested the previous resistance. We're still bearish because the 10's below the 20. Ah, darn it. Fuck. Now it's got wider. That could be the beginning of another big thick red candle. 1, 2, 3, 4, 5 might take a nosedive. We've got a new wedge, and it's wider. Oh. Did you put it in the back there? I'll come up and get it here in a little bit. If you find time, put it in that utility closet or back in the stairwell. I don't need it tonight. I'm in a trade right now. I'll be down there in a bit. This is number 5. I mean, this has really been prolonged, too long. We got a triple top on the, oh God, 1, 2, 3, 4, 5 times. Tried to break 63. Down 25%. Be nice to break that 63 right here on that red line. My Elizabeth broke down last night, the red one. Yeah, I gotta go here a second. Bracket. You've been playing with me too long. We're at another resistance again. This is the fifth one. Actually, the fourth one since I've been in it. Let's move on up. Wouldn't it be nice to get 7781? We got so many resistance levels to break. Three white soldiers out of the gate. I'm even. Again. And then it'll probably come back and retest the way this shit's been acting today. If we can just get that 10 to cross. I can't believe I did that. I'm actually feeling good for the first time. Okay, I gotta go, so I got out. We're bullish now. I got out at 440. My average is 403, something like that. So here we go with the results. I'll be right back. starting to look bullish too, right when I get in. When I get out at 440, we're starting to look bullish. It's not. You better look again. This thing will hit 780. I gotta go. I gotta take care of this. Shit. It's a bummer. What happens when you don't have much sleep. Now it's starting to be bullish. After all that, I'll be right back. I'm going to turn the ladies on until I get back. And go, hey, breast, we got cleavage.
And the possibility that this rally continues through year end.
Yes, I mean, the broadening out that we've experienced year to date has been extremely healthy. We've got, like you mentioned, 31% year over year growth in earnings for Q2. We're expecting that to rise to about 26% through year end. So if you look at the contribution to Mag 7, only up about 9.3% so far year to date against the broader S&P as of last Friday, roughly 14.3%. We could actually see some leadership come through the second half of the year for those mega cap names in the Mag 7. So we're pretty optimistic for a pretty robust Q4, but we got to get through the midterm elections first. That's really our next hurdle.
And how are you looking at this AI trade CapEx debate as it's ongoing? I mean, we've got almost $2.5 trillion in terms of our four largest hyperscalers. How are you looking at that? Are you viewing that as being in line with your expectations? Is it under? Is it excessive?
We're looking at the way that that CapEx is being financed right now. I mean, a lot of it's taken place off balance sheets. We're keeping an eye on that. Overall, we obviously feel it's very healthy for the economy. If you look at the contribution of CapEx to GDP growth, it's obviously a significant portion of that. And so, right now, the main takeaway is that CapEx is not decreasing; it's actually accelerating, and that is very healthy for the economy and healthy for tech stocks, specifically anybody related to, semiconductors, hardware, that space.
And Tim, how are you looking at the durability of demand right now? And as we look across these major hyperscalers with those astronomical numbers in terms of their spend, who do you feel is best positioned to actually see some return on their investments?
I think that the Mag 7 in general, if you were to ask for some of my top picks, I mean, just look at the laggards in the space. Tesla still lagging year to date. You've got Meta still lagging year to date. Microsoft has done fairly well as of recently. But really, contribution from that entire group is very, very likely here through the end of Q4. And that's really what we're looking for.
And as we look broadly across the Mag 7 right now, Tim, who do you view as being the most underappreciated? You put some good candidates in that group there.
Probably the most underappreciated, just from the perspective of being kind of taken down with the entire software sector. Probably Microsoft. But I would have to put Tesla in that group as well. It's just the runway for Tesla is simply enormous over the coming years. So, those would be my two picks.
And before we have to say goodbye, I want to talk about the consumer because we do have the retailers still left this weekend to learn more about the consumer. But we did start to see some cracks. We got some weaker than expected retail sales. There were some one-off items in there that may have affected July numbers. But how are you looking at the consumer right now? We also saw sentiment fall unexpectedly, which isn't a change. We've seen sentiment be low and the consumer continue to spend. But Tim, are you expecting before year end to start to see more of those moving in line where we actually start to see some pullback in corporate earnings? Because eventually that sentiment is going to start to show up, right? I mean, doesn't history show at some point it has to then affect people's spending?
Yeah, no, I think we probably need to see some additional data at this point. When we lifted the hood on that number, we were looking at the traditional non-store retailer like Amazon. It was down, autos were down, so it was definitely broad-based enough to be concerning. But then you looked at other categories, bars, restaurants, that sort of thing was actually positive, clothing. So I think we probably need to see some additional data to get a really good gauge as to the state of the consumer at this point.
Tim, always great to talk to you. Really appreciate you taking time on your Monday morning to be with us.
Thank you for having me on.
Of course, Tim Nyland, Co-Chief Investment Officer over at Synergy Asset Management. And don't go anywhere. We've got a lot more coming your way today. We've got the big three next. We've got 3 products, 3 charts, and 3 trades for you. Rick Ducat will be taking us through the technicals. Dan Russo is joining us to take us through his picks today for the iShares Commodity Indexed Trust ETF, the Sprott Physical Gold ETF, and the VanEck Gold Miners ETF. That's all next on Trading 360 on Schwab Network.
Trading floor in the world. This is Opening Bell with Nicole Petalides, live on the floor of the New York Stock Exchange. The countdown, the setups, the stories that make markets move. Minute by minute breakdown of the biggest headlines, earnings, and global movers. Just the trades that matter. As the bell hits and the markets react in real time, Opening Bell, live at the NYSE, right when it counts.
Have you ever watched an interview and thought, I wish they had 5 more minutes, or I want to know how they discovered that hidden gem? That's exactly where Market Matters comes in. I'm Marley Caden, and our podcast is slowing things down. We're going beyond the earnings to get to the heart of the people and companies driving the global economy. If you want the full story, not just the headlines, Market Matters is for you. Subscribe wherever you get your podcasts. Welcome back to Trading 360. I'm Marley Caden. It's time for the big 3. We've got 3 products for you. Rick Ducat will be taking us through the charts for those products. And here to take us through the picks, Dan Russo, co-CIO of Potomac Fund Management. Dan, great to have you on. Would love to kick things off just with a big picture thought on the overall equity market that we're seeing to start another week here. Few straggler retail names left over, and of course we're waiting for the Super Bowl at the end of next week with NVIDIA.
Yeah, sure. So it's great to be back. Thank you for having me. I guess, kind of big picture, some of the things that we've been writing about and talking about from a markets perspective, an equity markets perspective, is quite simple. We have an uptrend for the S&P 500, the S&P 500 going out at all-time highs last week with confirmation from breadth, and I think that this is important. The New York Stock Exchange advanced decline line also going out at all-time highs, so confirming the price strength that we've seen in the index. And what stands out to me in that dynamic is the fact that That's all happening without the Mag 7 making new highs, right? If you look kind of at an ETF that tracks the Mag 7 stocks, it's kind of consolidating. It's just below its highs in fairness, but equity market strength is confirmed by breadth, i.e. participation, playing out without the big kind of Mag 7 / AI narrative as a massive tailwind. So I can only think, what happens if the Mag 7s get in gear with the rest of the market? So, from a trend perspective, it's hard to make the case that the market is anything but bullish. Confirmation from breadth. I mean, just look at what's happening with the small caps, also trading near or at record levels. If we could get the NASDAQ in gear along with the Mag 7, that's just an added tailwind.
All right, so then let's look across your picks here. Your first one, you've got the iShares S&P GSCI Commodity Index Trust ETF. We've got some broad exposure there in that basket. You've got energy, agriculture, industrial and precious metals. How are you looking at this one, Dan?
So this one's kind of interesting to me because we look at it from a few different angles. Everything we do here at Potomac is based on quantitative technical analysis, and we are a tactical manager. So what's interesting to me is I'm starting to see commodities broadly showing up in a lot of the momentum work that we're doing. If we look at this product in particular, kind of consolidating right around the levels that we saw back in 2012, 2013, right? This is all playing out above a rising 40-week moving average. So within the context of a longer-term uptrend. And the most fascinating part to me, and I wrote about this today in a note, commodities, in our opinion, are still likely very under-owned in strategic portfolios. It used to be, you learned about asset classes, we learned about stocks, bonds, and commodities, right? And then for a long time, probably from 2011 until recently, it was really just stocks and bonds in strategic portfolios. So if we can start to see commodities broadly continue to rally, build on the momentum that's showing up in our quantitative models, right, there's an opportunity there as we think that the group is broadly underowned.
All right, Rick, so as we look at the technicals here for this basket of commodities, what are you seeing? I mean, I was looking at the chart a little before. It's outperforming the overall markets pretty significantly, but what are you seeing in the technical setup?
Yeah, commodities can be interesting because they're an important diversifier. They can be far less correlated to other stocks than other products here. So just food for thought there. But what we see here is a repeated set of highs around 34.50 or so. We did have highs beyond that, just shy of 35. But from there, you could draw perhaps a downward sloping trend line here, as well as a corresponding upward sloping shorter term line, our two white lines giving us more of a triangular shape right now. So this may feel boring when it's happening here because you have lower volatility or an increasingly narrowing boundary for your prices here, but low volatility can often be the precursor to high volatility when a breakout does happen. It looks like perhaps we could be starting to push to the upside in this name. So the area to watch now could be 33.50 here, because that would be another high point that we saw during our recent rally here. If we were to move lower, if this were to kind of fizzle out, 31.40 here, 30.40 as well, represent some notable low points that we saw recently. When we think about our moving averages in this case here, the picture is that we are seeing one of improvement. Our dark blue 5-day EMA near 32.41 is the closest to our current price activity. It lines up quite closely with our downward sloping trend line here. So the old resistance could become new support in the form of a trend line. We also have a confluence in that it matches up with our short-term moving average. RSI, our measure of momentum, still trending upward here. Look for a push above that 70 level alongside price breaking above its old relative highs for further bullish signals. So finally, our volume profile study shows a small pocket of trading activity up here near about 34, and then a larger node here, kind of with two spikes between at about 31 and 32 roughly. So those are the significant volume activity areas.
All right, right now it is higher on this session. We are up almost 0.9% right now for GSG is the ticker on that one. Now we're going to stay in commodities. We're going to move specifically to gold, though. You like the Sprott Physical Gold Trust ETF, Dan. This one's an interesting play in that it allows you to own gold without actually having to keep the heavy metal in your home. So how are you looking at this one?
Yeah, sure. So before we dive into that one, I think Rick brought up a great point as it relates to commodities broadly as a diversifier. I think one of the key points viewers should take away is that what traditionally diversifies equities changes over time. And the key driver of the shifts in correlations for asset classes is inflation, right? And with CPI...
coming up to resistance. That was a good, I mean, that was a worrisome call. The volume's picking up. Had so many signals. Every time I got to resist, it took 4 times. And 4 or 5 on the bottom. I mean, it went past its limit. It was a fallen wedge. Then I had to redraw it. And then it hit my target. So, that son of a buck down there at the IRS. Oh gosh. I thought I didn't put all my equipment up, and I did. So it cost me a trade. I don't want to jump in it now. Unless it breaks. You don't do that to be on a sleepy. Whew. Cleavage. Right when they started showing the cleavage, the market bounced. I think it's part of their strategy. PHYS. Physical Gold Trust ETF. PHYS. And I'm not much of an ETF guy. PHYS. I'm going to look at that one here in a second. He's got a descending flag. I see it's fallen wedge. Instead, he's got it drawn wrong. Okay, the 7780s are at $5. So that was just very, very slow. And I was looking at my biggest mistake on this trade, I have to think about what I did wrong, is my time frame. I had this in a 1 minute and it looked bullish, but if I put it in a 2 minute, it was not bullish. So I got to keep this in the 2 minute and the /ES in the 1 minute. That way I can see both actions. But I would have not took that trade until the end, and it's still wide mouth. The 3 white soldiers showed up. The net told me it was bullish, but I would have not took this trade. I did on the 1 minute because it looked obvious. And we're coming back to support. But then it's choppy, just like that guy said. We got pullback here to the 9. Now the 63, the one we broke so hard, has now found support. So I'm going to grab one contract. Yeah, it's kind of a. I'm just relying on that /ES if that holds at 63. Whoa. Damn, Jim. What you trying to fucking do there? $480. I scalped it off the 10 and got out of it. As long as we're close to this VWAP in the 200, I don't want to take much chances. This is the week of truth or dare for me. Come on, baby. Do the locomotion. Okay, we're retesting the 63 again. This is going to be do or die. And we're on the 20. This is the first time we left the, right here. How much are they? They're at 330. Now we're below it. We got a triple bottom on the slashy yes. The 7780s are now at 285. Once it gets this momentum, what do you think, boys? I'm thinking about come on, baby, do the locomotion. 3 black crows. Oh, I just got one. Fuck. I thought I pushed to 5. Well, that kind of screws everything. I did push the 5, I just pushed the wrong thing. Be careful today. Be careful. Back to resistance. I mean support now. What was resistance? This is it. It has to hold here or we're in more drama. Well, they didn't hold. That's a new low. Man, this sucker.
S&P 500 extending decline, session low now, 0.2%.
Yeah, we don't appreciate that. I'm not seeing anything yet. Cause us to turn around, except we're at that previous resistance, which now is support. Yeah, that was probably shaking some people out right there. There's the first spinning top. That's one good sign. It's like a doji. Oh, that would have been a bad thing. You don't do that. We're still bearish. Just a bearish day. Blink it. We just now hit the 10. Then we're back at the 63 on the /ES. I'm not seeing any good reversals yet. It's a real tough one. Bring back the cleavage. We need it. Bring back the cleavage. We need it. There's the cleavage. Pain in the ass. I don't think you're going to get like a big fat candle today unless something really spectacular happens. We're back at the 63 on the /ES. You know what, I'm going to get out of these suckers. I don't. That one didn't go too good. I mean, it was okay, but it got out at 230.
Short-term price action is kind of completely unpredictable. So You could see a flawless beat and raise quarter and still get technical profit taking or choppy trading just because of how fast the stock is.
Okay, kitty. Is it going to break out? It's a toughie. $150 minus. Little inverted hammer right here. The 7780s are at 250. And the 7775s are at 450. Inverted hammer. Like very choppy day. Everything hits resistance, it kind of just gives out. I'm looking at the 7775s now. Or is this the regular 7770? That's an inverted hammer. That's kind of bullish off that moving average. I gotta make 150 back. SanDisk had a pull back here, and I've got it. Back to the orbit 1760. Now, I'm liking how the, I'm gonna grab one. I'm kind of liking where the tin is curling up. Well, now it's not too hot. It's 11:02. She ain't getting dead. She said, I'm getting dead. And there's 5 10%ers. That's what it looks like today. Wonder if that'll just slide right up under there and follow that 10. I'm gonna put my soup on. I got it out of them cheap $20. I'm gonna wait for it to cross. We're good. Glad I got out. Thanks for having my back, buddy. They're getting cheaper by the minute. So far we've been in a range. You notice the 10 started to cross. So if this breaks out, There's a lot of fake flags in here today, people, so be careful.
Arab News says that Iran's Karbabadi and Chinese counterpart discussed regional peace, security, and the threat of the situation.
Well, hello everybody, this is Donald J. Trump. You're behind the markets. If you're a real day trader, go real time at financialjuice.com/purchase and save 67% on a subscription. Isn't that one big, huge, brilliant deal? Come on, people.
Come on! Come on, you cockroaches!
Again, that's Iran's Deputy Minister Karbabadi meeting with Chinese counterpart to discuss regional peace, security, and the threat of the situation, according to Arab News.
Still bearish. It's about an even 50-50 here today. You said yesterday I go through a lot of shoes. I haven't bought a pair of shoes in 2.5 years. But I am going to get me a new pair. I about wore these out. All but one pair. Then my murals. Trying to squeeze, but the tape don't look ready. Oh. Oh. Get ready, Ian. Get ready. We got a double top. A big old green candle there. Got that inverted long neck doji. Tricky, tricky, tricky. Tricky, tricky, tricky. Three white soldiers. Slash ES is at the 200 SMA. Right there. You got a double top break, so if it comes back and touches that double top and holds, that's where I'm going to grab one. The tape's looking decent now. To the VWAP. Reddit. Now Got an alert on now. I got an alert on now. Ah! Service now. Ugh. Damn arrow, there's gotta be a way I can brighten that up a little bit. Three black crows. This all looks bullish here. Here we come down to touch my support gal. Come on, baby, touching my support. We're squeezing on the /ES. 1, 2, 3, 4, 5, 6, 7 minutes trying to break the 200. And there she goes. SPX at the 200 on the 1 minute. Breaks that, we're going off to the races. There it goes. Reddit.
stocks of crude oil in the US SPR fell by about 5.3 million barrels to 293.4 million barrels last week, the lowest since 1982.
We're starting to be bearish again. We got a triple bottom down here. They're coming down to the triple bottom. Then it could go down farther. We got 3 black crows right now on a 2-minute. I don't know how these act on 2-minute. I know what they do on a 1-minute. We got a 1, 2, 3 and a 1, 2, 3. So we can get down here to 7, 7, 7, 1, 3, 7. Right there. That's your first one. On the 1-minute. 11:29. Microsoft down 1283. NVIDIA is only one green. A lot of mumble jumbo. Man, this action today is just horrible. Triple bottom. What's this here? Oh yeah, today's definitely a chop day. The 2-minute is a strategy that this guy trades that been on Wall Street for 50 years, 40 years. Less noise. We're bearish now. We're definitely below all the supports. Now, in the 1 minute, we're still good. But we're I mean, this ain't looking good. Seems like I've been at this time forever. There's no snake breakout, pullback, or nothing. These are just too choppy. SPX is a perfect triple bottom at 77128. I might clean this up pretty soon. Here's the fallen wedge breakout. We got that one. Then got this one. Then we got 3 black crows here on the 5-minute. Locomotion. We're bearish. We're under the 20. My best advice is 1-2 minute scalps or 5-10%. Now we're becoming bearish. Snake breakout on the 2 minute. Be very careful, yeah, oh yeah, yeah. There's no bulls today. I hate action like this. Oh man, that's a big drop. Home Depot reports earnings tomorrow. Everything's pointing to this. Yeah, it sometimes just ain't worth trading. Just sit around. On a day like today, this is really bad. There's just no volume, no buyers, no sellers. More sellers than buyers. And this is real bad. No movement. Person shouldn't have to wait that long. Little bitty baby candles that suck. It's going to go down to that trend line. And this, yuck, 77.85. Head and Shoulders. Yeah, hard day. We're definitely at another support. I mean, the resistance levels and the support levels have been spot on, but this was a tough one. And here we are again. We got an inverse head and shoulders. We're a triple bottom, not counting the wicks. I mean, in 1 minute, this is where I'd jump in. But I can't trust nothing today. We got a snake. Let's do the snake. Blanket.
Fitch Ratings says US corporate default rates stay broadly flat in July, but volume is going to build.
No. Come on, baby. Break out of the snake. One, two, three. 1, 2. You can't tell nothing on the RSI or just got too small, too sideways. More drama. God, this looks so good on a regular day. I'd love to eat these up right now. There it is. Got a tweezer bottom with a hammer. There's no no rhythm today, nothing, except put. We're at the bottom of the chart, so that's what I don't. With a new low. Bear, where? We're dropping it.
Chinese President Xi is set to fly into US late September 23rd and leave September 25th, according to Politico.
I don't understand a word this guy says.
You're behind the markets. If you're a real day trader, go real time at financialjuice.com/merchant.
I can't understand a word he says. Middle Eastern violence fuels fears. I'm just going to cut him off because I don't understand a word he says. AMD down $3. It's had a good run Friday. Almost every breakout pulls back. Damn, 52, what? New more lows. What's SPY doing? An IWM. IWM's under the 200. SPY's joining it. QQQ the same. I don't see anything in here that tells me it's bullish yet. Meta's at 567. Look at Meta sell off. I got 561.56. Come on, baby, do the locomotion. Well, the market's a little choppy, and so is the sea. Don't do anything too crazy today. Well, the market's still choppy. Come on, 1 minute. See, we just got a big long snake. Nothing on the 2 minute either. Well, the fat cats are getting their way. It's now noon in Missouri. I don't really want to buy a put here because we're so low. But it keeps getting new lows. This sell off here just keeps going. 1, 2, 3, 4, 5, 6, 7 minutes. 2, 3, 4, 5, 6, 7. Bears are in control.
US Energy Secretary Wright, speaking on Fox News, says we'll continue to get better at escorting Hormuz traffic. And Wright says we are not fully back to full oil flow in the Middle East. Canada Prime Minister Carney says he expects to speak to Trump before the August 19th tariffs deadline. And Right on Around says the US is playing the long game. And Carly says we'll have opportunities over the next 48 hours to discuss in more detail as the negotiations go forward.
Yeah, this is boring. Not for long. Pittsville. Are we going to break out of the snake? Puts a bit of good play. Iran. If we don't hold 7784 or 87, we're going down more. Yummy. Every time it looks like a little promising, it just ain't working. I mean, these are nice little reversals here. And then they come in right at the peak. And I'm down to my last support on /ES.
Right, says the US is bringing out 8 or 9 million barrels of oil per day.
New low.
The Nasdaq 100 turns negative, erases gain of as much as 0.5%.
Well, hello everybody, this is Donald J. Trump. You're behind the markets. If you're a real day trader,
We're still bearish. We're under the 9. It keeps going down. Remember what happened here. $7,851. What an order. More drama. Who's still in puts? Stay away from calls, whatever you do. We're outside the box again. Boom. Cashing that in. We're still looking real bad. We got a long ways to go if this is going to keep this up. I'd almost swing them. Drama. I ain't seen any sign of reversal yet. More drama. Rich, rich, rich. $90-day 4-hour. We got the bottom of the cloud down there at 77.21. The 9. Or the 21 I need. The 21 moving average. around 77.20. Take off my shoes. Selling will keep going on. Yeah, starts to curve up, then new lows. This is definitely a shorted market. Where are we tonight? Oh, that's the bottom of a trend line there. What have we got? Let me pull up /ES. Randy. Oh God. This has got to get cleaned up. Okay. Endurance warranty. I'm going to start seeing a reversal. I'm going to clean this chart up in a second. Three white soldiers on the 2 minute. Prepare ye. Finally. And another red one. Snake breakout. Got an inverse head and shoulders here. Still on the, well, it's a 5 minute. That's a pretty good little sell off. How many of these do I have up? No. I want to trade. I might just go through a watch list. It's a boring Monday. It's such a... Okay. Is it time for this drag-on to go off? We've got the 63, so I'm going to the 1 minute. Clear drawing set. Time to get cleared. Reddit. How dare you? So we got an inverse head and shoulders and a triple top. This is the first decent thing I've seen all day. And we're going to do the cross trebuchet. Just like that. I want to see something here. That almost perfect. That's your support. This is the right shoulder the second time. Finally something. So we're hitting the right shoulder right now. Such a pretty world today. Look at my orders. No, it's not going to hold it. What a messed up day. Nothing today is read right. Oh man, Washboardjim, I'm the bear. Beware. Can we have a recovery here, please? Can we come up and break a triple top? The right shoulder with a small fake out. The war's over. Boom. Livid? Are you still here? Yes. Oh, he's on voice. Hello? Seven. Which one again? Spy? The SPX. Is that what you're talking about? Yeah. Oh, it's Spy. Well, I've got a channel right here on triple top on the SPX. And it's the same setup on the Spy too. 773.91. The triple top 773.80. Yep. I bought it. That's right. That's right. $773.79. Well, today's not really a fun day. I mean, if it was if you were in a put. Oh, very good. No. Yeah. Yeah, that's what you said. You know, sometimes I was thinking over the weekend how sometimes the simplest things just are hard to understand. Yep. Yep. Yeah. Well, that kind of, I thought about that all weekend. I was out there smothering a 105-degree temperature, cutting grass and putting in a floor and a door. And it was, I mean, I was wore out in 5 or 6 hours. Yeah. We've consolidated here for quite a bit, kind of. Man, we're getting ready to squeeze, so something's going to happen here real soon. Yep. 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 Well, after we talked about it, Yep. Yep. Don't beat yourself down. Beat yourself up. Yep. Yeah. Oh God. Nothing was holding. It was all looking pretty, but nothing was really breaking. But everything was holding. Well, yeah. Yep. Yep. No. The pull, and I've always said that. Wait till the pattern forms. Just don't jump in on the breakout. Well, yeah. Well, if you pull up the 20-day 1 hour, you can see 1 week where all we did was break out on where are you? On oh. Yep, we're at the 50 SMA right now. We're at the 50 SMA on the 1 minute. That's the right shoulder touch too, the second time. So it has to do it here. That's what you got to ask yourself. Hey, it has to do it here or. Yeah, I got a little bit, but we'll see. It's risky. Today's a very risky day if you want to try to play calls. But if you hit it and this thing starts to bounce at this bottom, boom. What time was it where you are now? Yeah, this is the hour where 2 o'clock to 3 o'clock I don't do very well. It's on calendar. Mr. had a good day today. MSTR. And I bet your coin did too. And GOD. There was a, oh shit, there was some kind of shipping stock that just, container stock. It was up like 1,600%. PH. No. I was supposed to do this one stock for a friend of mine. Well, caca. That one chart I did, one flag at wedge had five hits on the support and resistance level. I'm not getting a little nervous there. Can you turn your volume up just a notch? Do you know how to do that? Yeah. Yep. Yep, that 10 just kind of rubbed up against the 20 just for 3 minutes. We still might break out. I'm gonna go make me coffee. I'll be right back. I only got like 3, 4, maybe 4 hours sleep last night. You ever tried to replace a trailer house floor? Yeah. I got a trailer house up on my property I put my mom and sister in. I had to, we were just pulling up the whole living room floor. So yeah, I'll be back. We're at the 63 on the SPY. This is a solid resistance here. If it breaks, boom. You see that SPY? We're at the 63 with a triple top. You see the triple top on the 1 minute? Are you talking about a candle? Is that what you mean by fair value gap? Mine's 115. You're 2 something, 215. Oh. The 12 what? The 12:23. You're talking about 12:23 my time. The hour back. Yeah. Yeah, I got you. You're right. Yeah. Well, we got 3 white soldiers on the 2 minute on the SPY. We're squeezing between. We're squeezing right now. Just going to see on the 1 minute between the 9 and the 63. I'll go get my tea. Break it. Need to get this receipt out for this. I got me a leaf blower this weekend, electric one. Yep. Yeah, I went in there looking for a metal gas can. They don't want to put good gas in it, and I need a metal one. Metal. So I gotta write me a check for 150, 40 bucks. Yep. I didn't realize I could write that blower off on my business. Because I can, instead of sweeping sidewalks now, I just run that blower on there. Yeah. Oh. There's the pullback. Yeah. We've had a huge run. I think that's, and I've listened to the Fat Cats all morning. They were all just trying to be as bearish as they could. No. You might hear off the 63. Oh, I gotta call for. I gotta call somebody. We're back up there. This is number 4. If you want to make a little bit more. It has to break 77379. Yeah. On the 2 minute, the 10 SMA is crossing the 20 for the first time in a while. I'll get my, oh, there's my T. Man, oh man. There's hardly any bulls in this market right now. Might be all like this all week. Just to kind of, they probably want a 50% pullback on that big run we had a couple weeks ago. Kind of want to get a put. We kind of got a megaphone inside of an inverse head and shoulders, but yep. Yes. Yep. The 63 on the 1 minute is the hard one to break. $773.64. Done for the day. Very good. We'll probably get more selling here at the end of the day. There's no bull in here at all. None. None. I hear my phone. Lunch lady. Ooh. What you got to say, lunch lady? Yeah, we got a new Head and Shoulders now. I want to get more puts, but there we come back up to the 63 again. I don't think it could be one of them days where we get the big V. We're just way up too much from a couple weeks ago. blanket. It's trying on the 1 minute. Bring it. We're at resistance again. Come on. Do it. Do it. We're at resistance if you're in this trade. I like how that kind of creeped up there. They ain't saying much. Okay. Fred's vacuum cleaners on Friday, Kearney Street.
To clean your fridge coils with a vacuum cleaner, unplug it first. Then find the coils, usually at the bottom front or back, and use a long attachment.
I didn't ask that. Fred's Vacuum Cleaner Shop on Kearney Street, Springfield, Missouri. I ain't gonna do it. You know, we could almost call this one here just one big touch. Consolidated touch for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 22 minutes. That's the longest shoulder I've ever seen. I'm gonna call Fred. Yeah, Fred, I've been in there a couple months back. I got a Electrolux Eureka style F&G vacuum cleaner. I think it needs a new cord.
We can do those.
You got one there?
It's a wire and cord, ain't it?
Yeah.
Yeah, we've got
Plug
it.
in. But then you could probably, I think I know where it's messed up at. I'll come in there around 3:30.
Sounds good.
Okay, thank you. Will you have it? Could you have it ready tomorrow for me?
Oh yeah.
Thank you.
You're welcome. Thank you.
Fred. It's always good to have Fred Johnson there waiting for you. We're at resistance again. It's been like this all day. And we got 14 minutes to power hour. Then it's really going to get violent. Tomorrow might be the big day for us. I'm going to count to 10 minutes. And if you ain't broke out within 1, I'm going to get upset and have to break some arms. Because we get past 77.58 and have a whole body candle above it. Yay. We're squeezing right now on the 1 minute. Again. 7777, my lucky number. On the /ES. Boom. To 7785. Come on. Break it. Okay. Coward. This is worse than watching paint dry. Because every time you think that it's dry, you touch it and it's still wet. Come on, big fat candle. For me. For me. For me. You can do it. Oh. God. So close. Right to the penny, man. Don't jump in it right here, although we finally have some freedom, but not. I want to break this 3-minute candle here. 7778.89. We got 10 minutes to power hour. Shit's going to hit the fan soon. Did you say it was snowing? Yeah, I see the volume switch. Come on, break. I'm in. At my own risk. Oh. What was up? This is the first time today, I mean, I actually have some hope. I can't tell you how many times I've been teased today. And Walmart's at 114 off the orb. Shoot. We got 4 minutes to power hour. Four more minutes. We come back down to a triple bottom. Under 54. If this doesn't hold here. I'm watching them on both. I'm flipping back and forth. Yeah, I like it. It's a little more choppier, but we're still kind of bullish on this thing, unless this creeps on down on the 1 minute. And I'm also watching my regular on the right with the VWAP. Same as a SPY. The 2 minute on the SPY, and then I got the VWAP next to it. Right now it's a 1 minute. See at 1 minute. I see a lot more with the 1 minute. See the 2 minute, we got an ascending triangle, which is bullish out of the snake, but not on a day like today. This is a really bad day to be trading unless you're in puts. You got that on your mind. Because we got a triple bottom coming down here. We have an ascending triangle on the 1 minute, which is arguably a bullish pattern, but don't let a day like today get you down, because it's just one of them days. Nothing holds. Every resistance I called is pulled back. Almost every one of them. Well, practically every one of them. We got the megaphone. That's what getting me. It's more bearish than bullish, yeah, because it's leaning down. There's your pivot. I mean, that's almost perfect on the pivot point. Yeah. Now remember, this is during power hour when we started this pullback, and I kind of let everybody know 10 minutes. I said, you know, it looks like it coming into power hour on a day like today. Ain't too good. I really don't want to be driving much. I want to go to bed. Okay, here's the daily on the SPY. And on the daily on the SPY, we're at the 10 SMA, simple moving average, on the daily right now. That's the 10-day. That's the 9 EMA right there. That's the 21 EMA. Now I called 750 this week for support. And then you got to pay attention to this run. I mean, this is an extraordinary run. This right in here. You go back months before you see anything like that. And they got to consolidate. So I'm going to take my Fibonacci. I'm going to go with the wick. So support level, 61% pull. This is huge run. Let me show you why it's so huge. We had one back here. We had none of these runs. This one here is the closest to that one right there. And it's kind of leading out the same way. So that 10 SMA or 9 SMA is what's holding it up mostly. If that drops down below, boom, we could get my 750. And then on that Fibonacci, where you at? What do we have that on? Hour? Oh, that's a big 767. Look where it landed right there. And then you got that hill right there, pivot point, and then you got the gap right around 750. That's interesting. I might have to go back and read my old charts until we have good breakout days. Yep. Double bottom. It's a match. Match to that there. So it's solid support. Yep. And then right back to. 213. Coming down to the trend line. Ready into close. There we go again. This is triple bottom on the right shoulder. This is it. This is the final support. If that don't hold there, we're in trouble. I mean, we're in trouble, but I mean big trouble. La 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 la. How long has it been down here hovering around? This is called a Darvis box right here. God. Come on, give me a couple grand here. If we can break out of this Darvis. What the fudge? That's a Darvis box. And there's 3 white soldiers. Meta's curling up a little bit. So did Amazon. Google's at the 200. These are all on the 2-minute. We're at another resistance. Seems like 777775. Come on, break. We had a triple bottom here on the snake. Today's definitely a put day. Another squeeze between the 9 EMA and the 63. Still bearish. Well, we got 38 minutes left. And I'm not seeing nothing. There's no volume. Bulls are at home and the bears are here. SpaceX stock is rising. Is that a good sign for NVIDIA and Google? NVIDIA is involved in SpaceX. I think Google is too. Ah, darn it. Man, this is the weirdest action day I've ever seen. It's going sideways. You can't make anything here. Even the puts are flat now. See, on a normal day, this would be a great trade to take right here. calls wise. I mean, you don't know about puts because we've been consolidating forever. So many different head and shoulders on here. You almost think it'd just keep going down. Three more minutes. We got a half hour left. Triple bottom.
So to the Times, Trump says, "I'm not bluffing about 100% tariff on the UK." That's USTR Greer saying that Trump is not bluffing about 100% tariffs on the UK, according to the Times. The information reports that Tesla readies the August launch of its Cybercab.
Tariffs. That's what it's about.
Well, hello everybody, this is Educator. You're behind the markets. If you're a real day trader, go real time at financial.
I remember that tariff talk last week. We probably have another big day tomorrow too, selling. Come on, do something. SPX. Well, that's funny. What's PLTR doing today? Spy broke out of the Darvis box. Randy. Did you get any puts, Randy? I had nothing.
Companies that we work with, they want to keep assets. They want to focus on growing the business. Achievement is one of the only state-mandated reasons that you have to get rid of customers.
Followed this sports finance and just the sports landscape, especially around the Premier League, because there's been reported friction between those two sides of the
It was a good short. They let the Bears have it today. I can understand. These all-time highs, and you got all that negativity out there. And then you got the tariffs. I heard the tariffs again. Parabolic sell-off with a tweezer bottom on an ordinary day, I'd take his trade. But once we have a little bitty bounce, it'll going to pull right back down.
Anthropic revenue run rate surpasses $65 billion ahead of its IPO.
Man, that's going to be a big IPO. Unless they overprice it. I hope they don't. I don't think they need to.
So Anthropic is on track to generate annualized revenue of more than $65 billion based on its current performance, according to people familiar, up more than sevenfold from its pace at the end of last year. The company's run rate, a metric that projects full-year revenue from a shorter period, hit $65 billion by the end of July, according to the people who spoke on the condition of anonymity.
The 7760 puts were a sweetheart. 7780s. Now I'm looking at we've got a double bottom here on PLTR. We're in the cloud on the SPY. At resistance, tweezer bottom called out a little bit ago. Yeah, 7750s fell. I'm not in them, but what's that go to? Oh, the door. Everything's under the 200. Meta, Amazon on the 2 minute. Google. We're going to get a new low. We got a lot of room to drop. So I'm going to chart up the SPX here real fast. You're at resistance again, so it could pull back here. Every resistance I called, there's been a put play. And here's another one right here. It's either going to break out or pull back to a triple bottom. And the way it's been playing is pull back. We got 16 minutes left in the day. Brandy. Just a short bump up to the next resistance. If this one don't break. And it don't look like it wants to. Got it in. Yeah. There's 3 to 410, 430 on a double bottom snake breakout pullback.
One minute now until we get the market on close imbalance. Market on close imbalance, S&P 500, buy side 505 million, Nasdaq 100, sell side 51 million, Dow 30, buy side 305 million, Mag 7, sell side 127 million.
And a drop. Just like that. triple bottom. Let me see how much time we got. 8 minutes. Shit. No. Not very seriously if this thing breaks out.
The Nasdaq is engaging with regulators to offer nearly continuous trading 23 hours a day and 5 days a week on the Nasdaq stock market.
You're behind the markets. If you're a real day trader, go realtimefinancialjuice.com/purchase and save 67% on a subscription.
We got a triple bottom with a hammer and about 6 minutes left. Another average day. So Jim called to SPY at 750 today. We're at 772, 750 this week on SPY. And I have proof. Right now we're still bullish. If we can hold this support level for tomorrow. Ten SM, I think that's a 9. The 9 SMA. Then you got my cloud, 9 in the 21 EMA. So we're still at a support level. Still bullish. This is what you got to look out for. This parabolic run. And we can come back all the way back down to 63, down to this level right here if this cloud doesn't hold tomorrow. So tomorrow, lowest support is going to be this peak. And we're going to go with the wicks, being just as the week daily. Well, let's go with the wick. I mean the body. Sounds like we're getting some. No rain. Well. Yep, normally I'm a perma bull, but not today. You can get the sense. I mean, I've been a tape watcher forever. And it was like equilibrium. And then all of a sudden, the stream would come in and short. And then you had the mood of the way it's been here. We're way overbought. This is parabolic run right here, just too much. But we're getting down to support level, so we'll see tomorrow if that holds or not. But you know, it wouldn't hurt to even get back down here again. Right around 750 this week, if that happens. And then you got the constant, which you don't know what to believe over what's going on in Iran. I can't trust them, and I can't trust, well, I couldn't trust us during the Biden regime. And I kind of get mixed messages with Trump. And this was eight negotiations. I mean, that's too much. 3's enough. Three. So I gotta go run my vacuum cleaner over and get a new cord on it. I've been a perma bull for 22 years. And if I knew back then what I know now, during the Obama years, I'd be I'd be worth a lot of money. Lot. I can't remember, there's a chicken outlet that went, not Tyson, but some other one, that went BK for, shares are like 5 cents. It run up to $5. And it was a $40 stock. Hog, I can just go down the list. Ford at $1. Chevy at 50 cents. But they didn't have the balls to call it an Obama crash. They called it real estate. Barney Frank. And that could be true, because they started with Carter and then Clinton. I financed my house. I ended up giving it to my girlfriend during the Clinton years, and that was so easy. No down payment. Now it sells for like $300,000. I gave $125. This is in a good neighborhood. I did get into it with my neighbor once though about their damn dog. Oh, bell's already rung. Ding Ding! Well, yeah, I'm a bull. I'm definitely a bull. Today was like a wait and see and a couple puts and some calls, and one of my trades I got slapped in. Now what's going on? So MSID, we'll catch you later.